Good morning, good afternoon, good evening, wherever you reside on this wonderful big blue marble. I'd like to welcome you to our TopstepTV opening call. Good afternoon. And congratulations, you are at the right place at the right time. So we've got lots going on here today, lots of new stuff. We're going to bring that out here in just a little bit. But, well, just remember, throughout the week, we'll be your trading buddy. Okay, your trading mentor, your newscaster, your fellow trader, and even sometimes that extra cheesy bread knot that happens to make it into your pizza order. So let's get going here. Get yourself ready for some top-notch, up-to-date market knowledge with our good friend John, a.k.a. the Hoagland. Hello, Johnny.
Hello, Eddie. How are you this morning?
I'm chipper.
Good.
I don't know.
Good. Going to have to be. We got a lot of changes going on in these markets today. Tuesday, yes, September the 21st. As always, context is always changing, and we've got a lot of changing context today. And always remember risk management and patience.
The basics. Remember the basics. Well, as far as news goes, there's a lot of new stuff that we got to share with you. That's what they call it, the news. U.S. stock futures traded lower today, continuing that retreat after the good old Fed heads signaled it will keep interest rates higher for longer, including one more increase this year. I was going to say this week. This year, Dow futures yesterday, the Dow was down 170 points, S&P 30 points, and the NASDAQ dropped 120. Now, you guys are talking about when Andre was on, what is the Fed? Are they dovish? Are they hawkish? Do they just talk crow? Well, they were hawkish this time, okay? They held the rates steady yesterday, but still forecast another 25 basis points before the end of the year. So we'll be ready for that. We got some time to get prepared. And Goldman Sachs now expects the Fed to begin its interest rate cutting style in the fourth quarter of next year. So we got some time here. But, Johnny, what do you got? What do we got on the eco, and what do you got for us?
Well, it certainly looks like we are going to have higher rates for longer, and that is coming into the markets as we speak. As far as economic numbers today, at 7:30, the jobless claims numbers came out. The initial and continuing jobless claims were lower than expected. I think the more important number at 7:30 this morning was the Philly Fed number, which in August was negative. Now that's worsening business conditions in the Philly area. And today it came out a lot worse, negative 13.5. They were looking for negative 0.7. Actually, it was better in August. It was 12 in August. They were looking for negative 0.7 this time, and it came out negative 13.5. So worsening business conditions in the Pennsylvania area there. So see if that's going to be affecting the markets, but everything seems to be really focused on what happened yesterday with the Fed, a market state change. It's going to be an interesting trading day. 9 o'clock, we're still waiting for existing home sales and misleading indicators. And at 9:30, of course, we've got the natural gas storage numbers due out. VIX up 9% this morning, 16.47. The dollar index higher than it was yesterday. It's 105.69 last I checked it. This time yesterday it was at 105 even, and the yield on the 10-year continues to leak to the upside at approximately 4.5%. Again, last I checked. Get your seatbelts on, traders. It's going to be an interesting trading day.
It's going to be fun, Johnny. Hey, by the way, you check out this oil. Oil prices dropped sharply. That was pulling back from recent highs after the Fed's warning on U.S. higher interest rates. And yes, the Fed sort of affects everything, and that's what we got to watch. One of the things is the data from the EIA that was on Wednesday showed that crude fell just over 2 million barrels, well short of the 5.25 million barrel drop in the API that was reported a day earlier. Another thing too, John, do you play Fortnite?
I do not.
You do not. I didn't think so.
I've never gotten into video games, and
really,
something tells me I'm glad.
I tell you, I started out with Pong, and I haven't looked back. I am just a gamer to the teeth
from the very beginning.
from the very beginning. But anyway, Fortnite players, what they were doing, they're getting sued, and they're agreeing to pay back, get this, $245 million in surprise charges. Parents are fuming. So Federal Trade Commission stated contacting 37 million to let them know they can apply for refunds in-game Fortnite. So what they were doing is they were breaching child's privacy and tricking people into buying items in the popular online game. Shame on them. And you know what? Shame on you if you are not using that checklist. John, you did a great job yesterday filling that checklist out. So, hey, we're going to post the checklist in the YouTube link and in the Discord link. Use it, okay? Check it out. Have a game plan, have a checklist, and let's get on to our charts.
Yeah, I mean, if you view the markets consistently, you've got a better chance of consistently profiting. So yeah, let's jump into the charts. Team Topstep, my futures family, we've got some pretty big changes going on here. There's a lot to talk about. So as usual, we're starting on the daily. We do
prepare to be astonished.
Well, I don't know about that. And we aren't making predictions here. We're just thinking in probabilities and hypotheses. But when we look at this daily chart here in the S&Ps, there is a context change. We were range bound. We've broken two kind of important lines, maybe even three kind of important lines on this, maybe even four. Last week's low, weekly kickoff low, the trend line, and the 100-session moving average were all crushed yesterday. So we're going from range-bound rules to continuation rules. Range-bound, we fade the extremes. Continuation, we look to trade in the direction of the breakout, which would have us looking for shorts. So those breakout rules apply today. Volume yesterday, I was a little bit disappointed in futures and on the New York Stock Exchange that we didn't have more volume, but I'm kind of happy about that too. Maybe there's not as much oomph to this downside move. We're going to find out more over time. We did add 15,000 in open interest, so we brought in some new selling coming into this market. And if volume continues to hold up, and we continue to increase open interest, there's more downside to this market. I've got a couple of kind of downside targets here. So we've got the 18 swing low right here. That low is 43.9775. There's another sort of a swing low that we've already tested to this morning. That is the August 25th low. Which is where is that? Well, here it is. The low is 44.1225. It's already been checked. So the next swing low that we can try and seek out is this one here, and that low again is 43.97 quarter. On the continuous chart, if this market continues to move lower, there is a gap that was left. And that gap is from 43.51 right here down to 43.25 half. It's a pretty substantial 43.25 half. It's a pretty substantial gap. Now, this gap is represented by regular trading session only information. So you're not going to see it on a full session chart. I have another chart that I have the regular trading hour session for these reasons. So again, that gap goes from 43.51 approximately right here all the way down to 43.2550, 43.2550. So pretty decent gap with which to look for as a potential target or another opportunity. So if we were to gauge the measured move, now that goes from the high here to the low here. From this high, if we were to gauge that measured move, that's a pretty substantial measured move. It takes us down to 43.10 right down here, all the way down to this level, which puts us right down near this 20-session moving average. Now, I don't know if this is going to happen. What I'm looking at is the visual targets that traders may be focusing on. And if traders are focusing on those, there's a tendency to bring price there. We got to stack the nuances, right? So what are the nuances saying? Well, we've broken out of balance. We are now out of balance. We do not want to fight a directional move, especially one with the potential of continuation that I believe that this move has. The only caveat to that is the lack of really higher volume yesterday after that FOMC meeting came out. Now take a look at the 30. We're going to have a very interesting thing to show you here. So here's yesterday. Here's when this FOMC came out, the market broke. We all know that. It ended the day right on its patoot. And yes, that is an industry term. Patoot. And the market has been continuing to go lower all night long. When we look at this, we know we've got overnight inventory that is pretty stiff to the short side. We have a gap open. So if we can't close the gap relatively early, we're still going to be looking for opportunities for this market to continue to the downside. Now, what happened as far as profile information is concerned, we put in what's called a late spike at the end of the day. The market was largely range bound. And at the end of the day, it broke out and drove away from the current range and didn't give the market time to accept those levels in time, right? So what this gives us is another rule. It's another nuance. If we open below the bottom of a late spike, it is a probability of acceptance of lower pricing. So nuances, breakout below weekly kickoff low, breakout below this trend line, breakout and a continuation where we are going to be opening below that late spike. So we've got 3 strikes against any opportunities for longs here. It doesn't mean that it can't happen. Anything can happen. ACH, remember that. We're only looking at probabilities and hypotheses here. So what we're looking at is, the nuances are stacked for continuation to the downside. If somebody says something comes out, something happens, that can change in a heartbeat, as we're all well aware. But the bigger picture context of the market off the daily chart has changed, and we have to take that into account even as day traders. So the base of the late spike is in essence the weekly kickoff low. When the release came out, the market drove to it, came all the way back up to the opening range, came all the way back down to it, and finally broke. The low here, we're going to call this the base of the late spike, is 44.78 even. We open below, the market can come all the way back up to the base of that late spike and still maintain probability of acceptance of lower pricing. Acceptance of lower pricing doesn't mean price has to go in that direction in a straight line. The market is likely, we always talk about overnight inventory, the market could pull back, maybe even close the gap, maybe even if it gets to the base of the late spike, it's still an opportunity for us to look for continuation to the downside. The market is seriously out of balance this morning. Earlier opportunities may arise.
Now, John, real quick, you mentioned out of balance.
Yes.
Is this where we can take advantage of it, or is this where we need to say, hey, you know what, I got to pull back a little bit. I'm not sure on the true move.
Well, I mean, that's the question, right, Eddie? We're trying to stack the nuances. We're trying to think about where we would like to get in. The opening range might be an interesting opportunity. If the overnight inventory gets scared out right away, there could be an upside opportunity in this. Again, gap rules apply. We don't know what's going to happen. All We're saying is there is a change in context here that does offer potentially a bigger opportunity for you.
Okay. Thanks, Johnny.
You got it. So overnight inventory, to remind everybody, is the market closed here. It opened here, and all night long price has been moving lower. Overnight, it's mostly shorter time frames, weaker hands traders. It's not the longer time frame, big time traders that are trading overnight. It's P shooters like me. So by looking at price action from overnight, from where we started the overnight to where it is now, we can make an assumption that we've seen some pretty aggressive selling and a lot of shorter time frame shorts in the marketplace. All right, now NASDAQ. There's a lot of stuff to talk about today. Sometimes not so much. Today, there is a lot of information in these markets, and we're looking forward to hopefully helping you, get into your strategy and your process to take advantage of some of these bigger opportunities. I've already decided I'm not going to look at my 401k for the next couple of months, probably, unless we turn around and start heading higher.
Fuck, I say.
So again, yesterday we had broken the trend line. We broke last week's low. We broke the weekly kickoff low. We've broken the 100-session moving average in the overnight today, and the market is continuing to try and press lower. We have those same two swing lows here that might be targeted. Those swing lows, 14,792 quarter is this one. 14,792 quarter. 14.7. There's the 14,792 quarter. This one up here is 14,940. So those are two swing lows that are likely to be targeted by traders today. And see if we set up some sort of structure against those levels before taking any risk on anything opposite of the bigger picture here. So nuances. Again, we're stacking nuances. We've broken several support levels in the last two sessions. Volume was higher a little bit in the NASDAQ, and we added 3,500 in open interest yesterday, which isn't a big change, but still it indicates the people are willing to sell at lower prices, thinking prices are going to be lower. As long as that remains on an increase and volume maintains, the auction to the downside is likely to continue. I suggest don't fight directional moves. If you are, you've got to be able to manage risk very well. The way things look right now, the only long I think about is to try and take advantage of the overnight inventory adjustment if there is one. Any longs should be short time frame and reasonable targets. Shorts, we don't know how far this thing can go. And again, I'm not predicting anything. I'm just taking a look at the nuances that I see that most traders are looking at and taking a look and saying, well, this thing could really start to kind of fall apart on us a little bit. And it happens. It's not going to be the end of the world, right?
All right.
So here's the 30
minute. Got about 5 minutes here, Johnny.
Okay. Yeah. I'm sorry. There's just so much information. So context change on the daily chart again. Overnight inventory, very short. Obviously, we've got some shorter time frame traders short here. They're going to be looking for continuation off the open. If they don't see sellers come in off the open, it may offer us a better trade location if they unravel some of those overnight shorts. And the profile, again, we have a late spike. Okay, the base of the late spike where the market really started to come apart at the seams yesterday is 15,285. We're a long ways away from that. That would be a good trade, and it could happen. But as long as we open below the base of the late spike and below the low of the late spike, the probabilities are the market is going to continue to accept lower pricing. And again, ACH, anything can happen.
It can happen.
Yep. Now
anything.
The measured move on the daily chart in the NASDAQ could feasibly take us all the way down to 14,400, all the way down here. Now, that could take days, even weeks, but this would be the measured move. You take from here to here, and then you measure that same measurement from here down to here, 14,400. Let's go through crude real quick.
All right. You see that crude? I tell you, doesn't want to lay down. It's like a fighter getting knocked down. Let's get back up again. Get back up.
Well, there are a couple of things on this pullback from yesterday that aren't conducive to continuation of a downside auction. Tuesday's excess high does loom a little bit large this morning. That's this long shadow at the top of this bar here. But we lost volume yesterday. Okay. We lost open interest. We lost 9,400 overall, but we did add 6,000 in the November contract. So the loss in open interest is probably more that we're getting close to expiration. So that's kind of blurry. The volume, I think, was a little bit disappointing. And open interest, again, blurry. We didn't bring in more business. We cut off business with this lower volume on this push to the downside. Take a look at the 30-minute chart. All right, so we are still well within weekly kickoff levels. Okay, here's weekly kickoff highs all the way up here at 94. We've kind of broken Daniel. Another move up to this level right here, up to this trend line, could offer opportunity. Okay, we've opened in range and value. We seem to be pushing higher, though we've been putting in lower highs and lower lows for a period of time. So this trend line here seems somewhat pivotal, at least to me. There are naked points of control everywhere. We just hit yesterday's. There's a naked point of control up here. Naked point of control, naked point of control. There's a lot of visual targets. If this market kind of falls into balance, that could even out some more of the inventory on the big push to the upside and, give us more availability for buyers to continue this move to the upside in the longer time frame. Gold. Eddie, your
gold, my goodness.
Well, we've got, the market attempted yesterday to close above weekly kickoff high and above this trend line, which it did. But it kind of fell apart after that, right?
Oh, my goodness.
So now we go with a failed upside auction above weekly kickoff high. The target is back down to the weekly kickoff low. We've already gone from trend line to trend line. So, where are we? We added 10,000 in open interest yesterday. And where did that open interest come in? Was it buyers or sellers? Take a look at the 30-minute chart and where the volume came in. So 1965, that is weekly kickoff high, right? So we tested to it. We closed above it because the market closes at 1230. So there's the settlement. But after the number came out, look what happened to gold. It fell apart. So we've tested weekly kickoff high. We've rejected above it. We see the market continuing to push to the downside. We've got overnight inventory to the short side against a trend line. Below that trend line, we test weekly kickoff lows. So basically, we've remained range bound over the last couple of days. We've just tested above and tested to some important levels at the bottom. The most important thing that I want to point out is in the regular trading hours, we have now taken out the gap that created this island low. So this island low, which is sometimes a pretty powerful reversal signal, is no longer valid. It's no longer valid. So now we're looking at the whole picture and possibly rotating back and forth. If we get a good test of weekly kickoff low, that could be an interesting opportunity. And again, looking at this trend line right here, it seems to be having a little bit of trouble down below that level. What this tells me, we had a lot of trapped longs at the highs here. A lot of trapped longs. I don't know what they were thinking, but they certainly got themselves whacked out on the way down, and they're still getting whacked right now. So as long as those
Chicago way
trapped longs are gone, then that selling power will be out of the markets, and then we can take a real good look at it. But it's
now you're talking
day to day.
You're talking wow, there's two of me here. You're talking trapped. So basically, they were long. They got to a point where they could not sell anymore, and what they had to do is they had to dump it. Correct?
Yeah, they could. Yeah, if they're too long, there's nobody left to buy it.
Trapped.
So when that number came out, it just fell apart, and that's a lot of those trapped longs just bailing out. As soon as that number came out, they just started bailing, and and they just brought price. I mean, it settled at 12:30 up here. 1 o'clock, the number comes out, and look what happens. It just falls apart and continues to be looking like it's falling apart.
Terrible. All right. But anyway, hey, we've got 25 after here Central Time of the 8 o'clock hour. And coming up here next, I'm going to give you a chance to go grab some coffee, grab some tea, put some more ice in your bourbon, whatever you need. We got Fast Market coming up next with Michael Patak and, of course, John Hoagland.
Don't drink and trade.
You do.
I don't.
You don't?
No, this is coffee.
What? You got some Jameson. I see that Jameson bottle.
No.
Nah.
That's for later on.
All right. We'll be right back. And we're back as promised. Yes, and look who we brought with us. Michael Patak. Word on the street is that somebody was jamming on the way to work today.
Yeah, we were just talking. We were just talking about that. I was jamming to some probably not artists that you guys would probably peg me for, but a little Beyonce, a little Lady Gaga, and a little Taylor Swift. Swear to God, little Taylor Swift. All three of them.
Yeah, it's well-produced music.
I mean, they're bangers. I don't really go off the reservation on like which ones. Like, I go the mainstream, the radio ones.
Right. Oh, hey guys, we've got. It's time to line the horses up. Mm-hmm. Giddy up.
Bad romance. James Harden. That was just it gets you going. I don't know. You turn it up, roll the windows down. I had a great
take your shirt off, hang out the window.
All the mountains are dusted right now on the top. It's just so beautiful.
Really? So
yeah.
You got some snow on the tops, huh?
It rained a bunch last night. The clouds are opening up, so you're gonna have some great photo ops. Okay, cool.
Yeah, I was gonna say take some pics.
Yeah. All right, guys. John, I took some notes on your. Short time frame longs. Okay,
we're open. Short time. Overnight inventory is short.
Overnight inventory is short. Nasdaq 78%. I'm going to see if there's a little pop going on right here. Yeah. And then, my shit just froze.
I'll let you know. I'll let you know if the opening range breaks either direction.
All right, let me know. Good short position up here. I like it from the short side. What levels are up here, real quick?
You got the gap close in the NASDAQ.
So what?
And then the base of the late spike. Late spike.
I'm not looking at it to what?
285 is the base of the late spike. That would be a significant pullback. I'm not really looking for that, but I want to see this opening range because we may do something here.
Is there anything up here in the 520s, 510s?
You gotta give me
guys. We have 80% S&P and NASDAQ long, so these longs are getting paid, but I bet you it's short-lived. So there might be some shorts around here. And I'm going to just get short one.
Yeah.
I'd like to say, Michael, can you share the gold?
70% long.
Really? Okay.
Yeah. All right. I just got a one lot on, a little banger, one lot banger, 15 handles on the up and down side.
There you go. Sacrificial lamb. See how deep the water is. See how cold the water is.
So you got the high of the opening range in the NASDAQ right now, Michael, is 0800. So if we take that out, that's kind of leaving the opening range at the low. We're kind of experiencing an overnight inventory adjustment.
Okay. I'm short from 03s, so it started dancing around there. Of course, it's trading 09s now. So I got about 7 handle heat. 18 half is my stop out. One lot coming in light, coming in tight. Still like it from the short side. 79% of S&P and NASDAQ folks are short. Or sorry, short. Long.
Okay.
So yeah, hey, if you're listening and you're long, you're part of the big herd. So if you're in the money, take it.
Yeah, let's see let's put some positions on here. Let's see where everybody is here today.
We got, the S&Ps are still in the opening range, and we're coming around to 3 minutes here.
I don't know if they're listening or not, but it's now down to 67%. So I'm going to get out. I'm going to get out only because it's sitting around this level. I don't really like it when it sits around a level. I was short from 03. It's dancing around here. If it does a ripper higher, maybe I'll play ball.
Hey, John.
Yes, sir.
Johnny, can you explain what the tilt is?
Well, the tilt is the aggregate positioning of everybody in the trading combine and the XFA accounts. So it tells us, whether there's a long or a short bias by thousands of traders here at Topstep. So we just took out the low of the opening range.
Just took it. What does that mean to you?
Missed it.
There's your short.
Yeah.
There's your damn short.
Yep.
There's your mistrade. One out of the gate.
Well, test the waters.
Yeah. Right? No, it's because I'm on the wrong chart now.
It would have hit my 15 handles. There's your short, guys. Just talked about it. If you're a 15 handle guy, 21 handles. If you're a 21 handle guy, 21 handle, who's out up there? Short from 1503. 21 handle Dave. 21 handles, you could have got it. That's the stuff. Timing, man. Timing.
Yeah.
Missed number one trade. You can start getting frustrated because it's like, but it's just,
I missed it too. I was on the wrong chart.
50-50 now, gentlemen, ladies and gentlemen. 50-50. So what did we just learn from the tilt indicator? We just learned that when everybody gets heavy one direction and the market will push higher like it did, you would have got 15 handles to 20 handles to the upside. And then everybody is long 80%, both S&P and I like to see traders take profits, but they don't. And that's why the tilt is important, because it shows all those ones that are looking for these monster moves. And sometimes they get whacked before the market goes that direction because they consider you the weak one. That's how we, I don't know. That's how I look at it.
Mm.
I have been that trader 1,000 times. So don't think that I'm pointing anybody out and I'm saying myself is any better than anybody.
I've got an order in to try and sell it up here at 1175 in the S&Ps.
Okay.
Because there's kind of a low volume note above that. The opening range is the high of the session. I'm just trying to find a pullback so I can get in.
Oh, you like it to the long side?
Downside. No, short. I'm looking short.
Oh, okay. You said pullback. All right.
Yeah, I'm looking for a pullback to get short.
So, oh, Why would you look for a pop to get short?
Yeah, that's what I mean.
Oh. pull back to the upside.
Yeah, because I mean, the 30-minute bar is to the downside now. Opening range is to the downside. So if I'm looking for a short, I kind of consider that a pullback. So all right, we just got filled. NASDAQ is at near the high of the regular trading hour session for us right now. So
okay, if I was still in my short and I didn't cover my short, I'd be stopped out up here at the 20s. But I got out with a scratch. All those week longs that were 80%, like whatever, all got shooken out. Now the markets are going back higher. Maybe those were the weak ones, and now it's going to say, "Hey, all you ones that aren't weak." There, I would have been stopped out, so I'm okay being a scratch on that. Even though I would have had my 15 handles, would have had one winner on.
Yeah, I'm with the opening range at the high of the session here in the S&Ps. It's got to take out the high of the opening range, and if it does that might be enough to frighten out a lot more of the overnight shorts that may be kind of still holding on to this position. So we're going to hang here for a little bit. We just tested and put in a new regular trading hour session high in the NASDAQ. It's coming off of that.
Regular session high in the NASDAQ is 18.20.
The regular trading hour session high is 0.20. Yeah, 0.20.
Yeah, 20.
At least in that area, right?
Man, that would have been another nice one.
We got some pretty strong negative delta here, and it seems price is moving congruent with that. So we're possibly seeing some new selling coming in down at this level. So we're sitting right now in the money. My position is at 44.1175. Market came maybe two points against me, maybe 3 points against me. But we're still holding the opening range at the high of the session. We've got some pretty aggressive negative delta. Seems to be congruent with direction, so we're going to stick with this for a little bit. The nuances, we've opened up below a late spike. That's kind of speaking of acceptance of pricing at lower levels. We got to be careful, though, because we have a lot of overnight shorts still in this market.
God damn it. Double clicked, went to center my screen, got filled, got out. Just giving away money.
That's the thing to do. I mean, you fat finger something, get out. Don't become the accidental trader.
I like your short. I want your short.
You can have it.
I want you loving. I want you.
Yeah, you're still jamming.
Hey, can we swing over to crude? I want to make sure that I'm looking at today's high. I know that we just pulled back from a high, but I'm looking at the 91.06 level. I think that was it was a top of a wick here. I think if check with Danny here and see what he's going to be doing with this nice recovery.
Well, look at where it stopped. We talked about this trend line at it. That's the lower trend line of Dan's channel, or as we like to call him, Dan'l.
Dan'l's a Dan channel. I was wondering what you guys Dan'l.
Yes,
a channel. Yeah,
a Dan'l.
Yeah, I mean that's a nice recovery too. I mean it's sort of changed direction, and buyers coming in very hard.
It's staying up. Okay. NASDAQ wants to stay above 15,000. It feels like it. It's giving it the college try.
Well, see, they're really saying opposite things. The opening range in the NASDAQ is the low of the session. The opening range in the S&Ps is the high of the session. What's a trader to do?
Which stocks are moving? Because you got either big players and one of them that's keeping it strong. One's weak.
Well, all of the tech stocks are lower. Even a lot of the pharmaceutical stocks are lower this morning. I think we also have some of the petroleum companies also looking a little bit lower this morning. Here's Chevron. So it's down about about 50 cents, maybe 0.3%. So all of the tech stocks basically are lower. You got Nvidia down almost 3% this morning. You got Google down 3% so far this morning. Apple, Microsoft, they're all lower. And that's just by looking at it by, market cap.
Above the 15,000. We're dancing around 15,000. Give or take 10 handles. What's that telling you guys? If you guys are in the chat, what's that? What's the market doing right now? What's it setting up for?
I'm going with my nuances. I've been just kind of thinking, look for a place to get short. The S&P's offered me that opportunity because it has left the opening range at the high of the day. It may or may not work, but for now, it seems to be kind of holding. The NASDAQ is the opposite. Again, the NASDAQ is the other direction. The opening range is the low of the session.
12.
Over here on YouTube, Ghost is talking about give it some time. NASDAQ's going to be on a free fall. If you can, give us a reason why you think that.
Yeah, that's helpful. Thanks, Eddie.
Why do you think it's going to dump?
Ed, if you catch any of that, bring it in here. I like to know that without. I'm not. John and Eddie, you both know I'm not staring at either one of those when I'm right here. You guys are right there. Discord's right there.
Ghost says, I believe it's wiping retail stops before heading down. Okay.
Yeah, those are the weak ones. That's when we talk about weak.
Mm-hmm.
If you do post something like that, give us a method behind the madness. Give us a reason why you think that.
And there's a lot of retail shorts in this market. Short time frame retail shorts.
Well, they haven't been shaken out yet, have they? At 20s, did that shake them out?
No, I think by and large they're sticking with it pretty good. I mean, we had negative 7,000 delta in the S&Ps. We're sitting here on the lows. There is some aggressive selling coming in. Is it going to be enough to keep the short time frame shorts in this market? Is it real selling or is it fake selling? Is it real or is it Memorex?
Yeah, a lot of people don't remember that one.
Yeah, I know, right?
Memorex. The hell is that? John King. John King says, "Hey, I'm about to go live." Well, now's the time to be very cautious. To approach it as slow as you can. Don't rush it. The question is, he's looking to change platforms, and I know that here at Topstep, we try to say that stick with the platform that got you where you are. It's really tough to switch that platform and do something different. If you're going to get funded, stay with that platform. I mean, it got you there.
Still dancing around plus or minus 15 handles from the 15,000 level.
Yeah. Let's see it take out the low of the opening range here in the NASDAQ.
Where's that again?
The low of the opening range and the low of the regular trading hour session. 975.
That's the low of the opening session, 975. And then
I'm sorry, 75. What is it? 14,975.
Yeah.
Yes, that's correct. Let's see the S&Ps test the overnight low here and then find more selling down there.
Hey, Jenner, we were talking about we were in third person a couple of days ago. You're late to that party, but go back to sleep.
Jenner.
Hopefully you're trading well.
All right, take a look what we got going on here. We do have our Fast Markets Top Quiz at 10:45. Power Players. We've got a funded trader coming on at 11 o'clock Central. And then, of course, our all-star coach, Jack Doherty. Good old Jack's going to be here at high noon. And please be here for the Power Players, funded trader interview, and our group coaching with Jack Doherty.
Write that down, folks.
Jack Doherty is somebody I've known for 40 years, I think, when I was
Does he owe you money or do you owe him money?
No, we're even. We're even.
We're even.
So when I was a deck holder in the lumber pit, he was a filling broker in the lumber pit. I didn't work for him, but I knew him pretty well. We spent about 3 years together while I was in the lumber pit, and he is a wonderful, great, knowledgeable man. I love me some Jack Doherty.
Mark here in YouTube thinks that the Nasdaq's going to go for the 14,940 daily low. Says it comes just short of what now is going higher. Baiting shorts to close out, longs to get in, more sellable liquidity for the eventual raid. You got it, General.
Yeah, we got NASDAQ has now taken out the low of the opening range. Didn't really find too many legs down there, but at least it's taken that step.
John, what's your target?
Well, because of the current situation, Eddie, I don't necessarily have one.
Okay.
Well, come on, Johnny. You gotta have a target.
Okay. All right. If we gotta have a target, let me take a look. My target is this swing low, which is 43.97.75. I'm going to go a couple of points short of that, so 4,400. I'm sorry, 43.99. Wait, is this correct? Hang on a second. Am I looking at this right? 43.97. Yeah, this is right. So, all right. I mean, I think if we really grow some legs to the downside, I'll be cutting myself short a little bit here. But let's go with 99.
Speaking of 99, yeah. I got long from 79s, looking for it to cruise back to 15,000. I2 is waiting for legs to grow to the downside, but now it's staying under. So those legs feel like they're growing to the downside.
Mm-hmm.
And my entry's okay. It ain't great. And there's going to hit my stop. Stops around 64 quarter. Sorry, this is moving fast. So who's ever catching my position? These are
What was your position again?
It's from 779.
Okay.
But it is dancing very close to my stop.
Your entry?
Yeah. No.
We do have numbers at 9, existing home sales and misleading indicators. So I think I will probably be out before that comes out.
That's a smart play, John. Okay, 79's right here, right now.
Right here, right now.
Okay, so the legs, they tried the legs to the downside. It's still slightly above the 75s, 975, the opening low. Didn't stop me out. It did 12 handle push against my entry, which maybe that's a good entry because it didn't hit my 15 handles.
See, I didn't want to put a target in there because the market saw it and is running away from it now. It's
well, maybe I put my long on because I had a short guy and a guy that was short.
So, all right, if we're directional, what do we look for opportunities? We look for low volume nodes. So my short is 1175 right here, just at the start of this low volume node. So as long as that remains, the trade is valid.
Okay.
But I'm going to, let this stew for a little while. Maybe get out if the market takes us to the overnight low, which is 03 approximately.
Stop
take that trade and then see what happens after the numbers come out at 9 o'clock.
Stopped out. Stopped out at 64s. Long 79s. It's staying below 15,000 currently.
Right.
It gave it a college try. We'll see. Down 500.
Always seems like when you have a position on, time stops.
Yeah, right.
You have a position on for 5 minutes, it seems like an hour.
All right, I like longs still, John. 60% of S&P folks are short. 73 are short on the
NASDAQ is putting in new daytime frame lows right now. The nuances are to the downside. Be careful with longs.
What if they're short time frame longs?
If they're short time frame longs and you can manage the risk on them, no problem. But we've got, what do we do here? Let's look at where the overnight low is in the NASDAQ here. The overnight low, 14,942 and a quarter. 14,942 and a quarter. That's your next downside test.
14,940.
92 and a quarter.
Oh, the 92s, yeah. Or sorry, the 40 level.
Yeah, 42 quarter, 942 quarter is the overnight low. Yes.
All right, I got long 50 quarter. A lot of folks are short in the NASDAQ.
I'm going to liquidate this position and just we'll see what happens at 9 o'clock when the number comes out. We've, just a little something in the box. Yeah. Not the magnitude of trade I was hoping for here this morning, but I can hope all I want. I don't get to choose, so I don't want to hold a position into the number, which So we're out.
Yeah, we're out too. And there you go.
So now, after the number, we'll see what comes up, see where we can limit risk, and look for the next opportunity.
Yes, sir.
And we got to get you positive. I want another blue little slip of paper behind you today.
Yeah, I'm down 600 now. Doing these light dance, just light before I really see something that I want to sink my teeth into, so to speak.
We get a question here from my good friend Josiah down in Naples, Florida. Why did I choose that profit target? Well, because I knew we were going to probably be getting flat before the number came out. But this swing low here from the 18th of August took us down to 43.97.75. And if traders are targeting that, it'll get hit, but I always go a little bit short of where I think the market's going to go. So that's where the 43.99 came in. And I was hoping to get it before the number came out, but I'll just be happy with what I have, and we'll look for another opportunity as the day goes on. Great to see you, Josiah, and great question.
Okay, here's your 40 level that just hit.
My brother Rick just gave you a nice compliment, Michael.
What's that?
He says, you seem to be a contrarian like Rich Dennis of C&D. Richard Dennis. You've heard of him, right?
I've heard of Richard Dennis, yeah.
Yes.
Well, I'm not getting paid on being a contrarian thus far, but I'm doing light dances. Thank God I'm on a one lot. See, that's why I like trading. I've not had a winner yet. Three trades, all losers.
So you got to take a little bit of a break.
Got to take a little bit of a break.
That.
We got 6 minutes anyway, so there's really no reason to put a big position on at all.
Mm-hmm.
34s now. So if it comes down to 920s, then guys, we would have had 100 handles within this 30-minute bar.
Wow. See, it's a little bit more volatile. There is a change in the context of the market.
Mm-hmm. Roy Jenkins, thank you. I like trading with cool traders. Good vibes.
Yeah, and he's stuck trading with me.
He's the coolest, and he's got the best vibes.
Oh, man.
What do we got for Jax? Do we have anything on the win streak, folks? I got a win streak. 4 days.
Yeah, I would argue it's in jeopardy today, but I hope for the best. That would not get you to the top win streaks. I'm gonna show it. I'm waiting right now. Eddie lost audio there for a little bit, so he's rejoining. If he's not back in a minute or two, I'll get out.
Hebby, same here. Let's sit on our hands, Hebby. If I'm saying your name right. 5 minutes till a few numbers come out.
I'm going to answer one other question here. Is Eddie's still trying to pop in here? Dan Trader's asking. Wait, it wasn't. I don't think it was Dan Trader. Hang on. Yes, it is. With all this selling, but not much progress, do you think it could be absorption happening? So, I would think that we're true if the market, if we had this negative delta, but price was moving higher over time, the price is moving lower over time. I think this is, probably the beginning of multiple time frames acting in concert on this market. So you got, negative delta of 7,100. That's 7,100 more contracts have traded on the bid using sell market orders. That's aggressive. Price is moving in that direction. The last thing I want to do is try and step in front of it.
Yep. 4 minutes.
Right.
4 minutes.
I'm going to try and bring Eddie back in right now with the hot streak, and we'll see if Eddie has the volume.
Guys, check the very top of YouTube, trader checklist. If you do not have a trading plan, I want you to stop trading right now and look at that checklist. That's what you need to have. If you don't have it, so just fill it out. And fill it out with your best college try out of the gate. Find a trading buddy over in Discord. In the trading buddy room, which lit up yesterday after we directed you guys there, and you can help fill out your trading plans together.
Yeah, well, I've brought up the hot streak list. Unfortunately, still no audio on Eddie. I'll try and fix that in the background.
Okay, and I'll take it from here. 13 days has been our max so far. I mean, since we started showing this, I would have to go back to find out what our max is. But we're not going to play that game. We're going to go high bar is 13. High water mark is 13. 3 minutes till number. High water mark is 13. That is kick-ass. I'm on 4, and I think came into work today jamming to Lady Gaga. Come on. If I was down 4 days in a row, I'm not jamming to Lady Gaga. Maybe playing a little Beck or something. I'm a loser. I don't know. I wouldn't do that. But I do have that on my playlist. But the boys, when they ride in the car with me, or truck, love Blink 182. I'm like, so do I. That's 90s stuff. So we play it all the time now.
Yeah, it's good stuff.
It's great when they like music from like your little like sweet spot of like going narrow and deep in all your music.
Mm-hmm.
Oh, and our lows NASDAQ. Sitting on my hands, Michael. 2 minutes to the number. CNBC has nothing going on.
Mm-hmm.
58% of people are short. 62 in the NASDAQ. 58 in the 62 in the S&P. 58 NASDAQ.
Okay.
If it's close, guys, I'm not going to say the other one. I'm just going to say sisters and brothers because they're pretty much
even.
And then their cousins crude. Oh shit! I just centered again. Happened again, and I got long, and then I got out. $40. I'm not doing this. I gotta know where my gun is. I gotta know where the gun's pointing at. It's just
be careful.
Smarter. Be smart.
Don't put your finger on the trigger until you're ready to shoot.
I know. I had it on there. I've been saying not to trade, but I had it on the trigger. Like I'm gonna that's not sniper like. Sit in your scope, get it in your crosshairs. Wait.
10 seconds here before the numbers come out.
Look at how thin it gets. Woo-wee.
Yeah.
Why do you think we always kind of recommend don't trade? Whoa.
All right.
6% of folks are long.
Still waiting for it to come out.
I got 63% of people not using their trading checklist. So if you're trading right now, that's a lot of you folks. That trading checklist is a trading plan. So I would question, unless you have a different approach about anything, I would question that 63% of folks need to pause, look at the checklist, know that there's opportunity all throughout the day, but just look at the checklist and say, can any of these things in this area or in this checklist help me out? I would say a lot, but to each its own on what you deem valuable to you.
So misleading indicators, they were looking for a negative 0.5. It came out negative 0.4. Existing home sales also lower than expected. They were looking for a positive 0.74%. Came out negative 7%. So whatever that means.
Chris, biggest lot size ever put on? I'd love to know, John, what your biggest lot size is, but the market's moving, so I'm just going to answer it. 600 lots in the Dow Mini short, and that made my hands shake so much so that I had a tablet and I was going like this, trying to find that cell on the ladder.
You can't even write. You can't do anything.
Can't do anything, man. It's amazing how your emotions, when you get to a certain point where it's just wildly outside of your comfort zone, like wildly outside of your comfort zone. Like so much so that if anything happened good in the markets, I was short 600 by accident. Got stuck on the trade in the pit. And if the markets would have just rallied, if they would have had how about this? If they would have had low probability, if they would have had an unannounced interest rate cut, which we've seen that crazy stuff back in the day, I would have been upside down, been owing the firm money. Would have had to buy would have had to put an O'Hare ticket on, if you know what I mean, Hoagland. We'll talk about that shortly. Okay, there's 100 handles that we just picked up in 32 minutes. 32 minutes. So if you're short, if you were short that whole sell-off, great job. If you were picking bottoms like I was, shame on you. Not shame on you. Just learn from it.
Yeah, we were short, got out before the number came out. I'm a little bit in profit, but still now just kind of trying to figure out where to get back in.
Hey, Hoga, Rick Santelli's on CNBC. You ever meet Rick?
Yeah, I know Rick Santelli.
Rick Santelli, man, that guy is great. Didn't he create the Tea Party at one point? He did the whole, just throw it in the Lake Michigan or something like that.
Yeah, he got really upset on screen one day and the whole floor started cheering him on.
They saw it on the big screen. They saw him yelling in the pits, blah, 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 because he does the filming. I mean, you see him all the time. What's up, Rick? Hey, what's up, Uncle? So I'd always do tours on the floor of like traders that we backed and everything would be in town. And we'd walk by. Typically, we got a high probability times walked by him and took a picture. They all took pictures with him.
Mm-hmm. Yeah, he stopped and talked to us for a little while, which was cool.
Oh, yeah, you were there for some of them, yeah. Mm-hmm. And he likes his cigarettes. He does.
Yeah.
They call it Smoker's Alley, right, John? Underneath the Board of Trade is like it's not an alley. It's like 50
it used to be
wide.
LaSalle Street, but now it's not. Now there's no cars on it. It's more of like a plaza.
Yeah. There's your checklist again. Very top of your chat, everybody. Just give it a look. Even if you have a trading plan, just give this one a look. Maybe you'll say, "Oh, that's something I don't have."
Mm-hmm.
Oh. Well, you did say that it could keep breaking down. It could keep breaking down.
It just got to my initial target there.
Yeah, Ghost, it was 75. It was nuts. It was, I don't know if that's exact math, but like it was nuts. Like a 10-cent move, 75 grand. A 20-cent move. You're like, and the Dow was moving that, like the NASDAQ, because the Dow was thin, just like the NASDAQ. But the whole loss was between 5,000 to 7,000. So I worked my way out of it very close to my entry. I had one of my mentors right next to me, like, I'll take 50. And he does it again, I'll take 50. Like he didn't have to. He just took them.
Yeah, right.
Yeah.
That's the one thing about being in the pit. If you have a couple of friends and you get in trouble, they can help you out a little bit.
Those are the best trading buddies. You got to kind of give back though.
Yeah. I think one of my probably one of my biggest intentional positions. Something I actually hit was probably a 20 lot in the S&Ps, which is 100 minis.
Yeah. Outright, naked.
Yep.
In your own personal.
Yep. Before even the minis were around.
Ooh, that's even scarier.
Yeah, you got to get out in the pit.
Got to get out in the pit. And remember, folks, we've talked about the tilt. The pit would know your position. Everybody in the pit would have an idea of the bigger, not the small little one lot guys.
No, the big traders, you knew what they were doing.
Mm-hmm.
Hell, some of them didn't even know what they were doing. I was standing next to one of the biggest traders in the pit, talking to his clerk, and he leans over and he says, "What's my position?" And his clerk says, 82. And he goes, "Long or short?" I'm like, is he serious? He got 82 contracts. He's long or short 82. He doesn't know which. He's like, yeah.
I remember he told me that story. I'm like, come on, man. Yeah. But that's true. I mean, like, it was so wild in there.
He never had to make money. He could have lost $10 million and that wouldn't have changed his lifestyle. He came from a very wealthy family.
Oh yeah, those ones were the ones that, and if they caught luck for a while and they're a wealthy family, you're like, okay, all right, asshole, chill. Pump the brakes, dude. We're all the same. Well, they're not all the same, but we're all here playing the same little auction.
Yep.
All right, so it bounced pretty strong off. I mean, put a floor in. Come on, Michael, find it. Put a floor in the 19. So there's your 200 handles off the 20s that we were talking about higher, and then it pops off that already 30 handles, 40 handles almost. Apple popping. Thanks, Pablo.
All right, so now Dan, I think it was Dan Trader that was asking if there possible accumulation. Now, if these markets continue to push higher and Delta remains negative, we may have shown them to be a little bit too cheap, at least for now.
So then they shook out all the longs. Period.
Yes. And all those shorts are still in it. All those weak shorts are still in
it. Probably in the money. Really liked their position. Thought they had the tiger by the tail. I've been there.
Mm-hmm. We all have been. My good man. Well, I wonder what happened to Eddie. He's having trouble with his audio.
Yeah.
Hoag, the gremlins are out today. They have come for Eddie. We'll see if we can get him back in here and let you know.
I got him.
Hey, ICT, I see you're in here. We have money burning in our pocket to pay your son. We have money burning in our pocket. So just have him get the information, wire instructions, and whatnot over to us. We have tried multiple times, doing our best. We have paid out 100% of the traders in our history that have earned profits and requested a payout. 100%. So we want to keep that going.
Mm-hmm, for sure. So Fred.
Okay. Spam. All right. Very cool.
Okay. So Fred's question was, I think it was, hang on, let me go back to it here. Can we say buyers are confident without testing the 818 low you mentioned on the opening call, 43.97? What's our low here? 43.98.75. Are they confident or not? It's kind of a mechanical level. So far, the opening range is the high of the session. We are losing delta on this pullback off the lows, or as Michael would say, a pop. What was it? A little pop.
Pop. Yeah.
So with the close proximity to that level, it could be a low, but I'm looking at it as kind of a weak low as far as the auction is concerned.
Chicago Trader, if you requested a payout, we 100% would pay you out So if you didn't get paid out, contact them and let them know we chatted. I've made every trader in the history of starting Topstep good. And if there's something on your end, then that's, I don't know the details.
Right. No, when people are getting paid, we want them to get paid.
Yeah.
100%. It's never been an issue. So we got half back here.
Man, that was a good pop off those 920s. Did anybody cover? You shorts cover down there? It's 50-50 for the sisters. And the cousin is 74% short. Crude oil, 74% short. But popped off those 20s, sold off those 20s, 100 to the upside, 100 to the downside, 30 minutes. Now we just popped off that 7, 6, 5, 50 handles that we've done in, I don't know, 10, 15 minutes since the last 30 handle bar or 30 minute bar. Last 30 minute bar, you got like almost 100 handles. This 30 minute bars, you already got 50 handles. And is it telling you anything? Is there any levels? Because everybody's talking about the 40s down here, the 940s. Rip through that down to 20. So you would have to take 20 handles of heat at least if you caught the 40s or 40 area.
I mean, the overnight low is kind of in that area, isn't it? 942 quarter. We talked about that. So, the overnight low can sometimes be, somewhat pivotal. If the market looks below it and then comes back above it, sometimes you'll scare out some shorts down there. Mm-hmm. In this case, in this context. So a lot of people are kind of looking at that overnight low as somewhat pivotal here.
Is there any rotation happening here? Will said that about something about rotation and with building value below 15,000. And Striker, hell of a entry on your long 925. Damn.
I mean, are we looking for balance? Markets are always looking for balance. Have we found it yet? I don't think so.
I think, are we building value below the 15,000?
Well, here's the volume value high. It's about 15,015 approximately, 15,015. So, right now value is spanning it. Value low, volume on this platform is 14,950. Let's just call it 14,950-ish, right? So value is certainly being developed lower, but is it being developed below that 1,500 level? If that's that's a big fat round number, right? It's always going to be an important number. So, but the longer we stay down here, the more volume we start to accumulate, the more volume is going to move lower. And that's, something that I look at, in the daytime frame. Does value move lower? Does point of control move lower? Those are all indications that sellers are in control and winning the day, at least for now. We got to about just over half back in the S&Ps. Almost got to that kind of high volume node where I got in before. That was a 44.11 quarter. Almost got there. I was kind of looking for that to maybe get back in at that level, but it hasn't gotten there just yet. Got
an electrician at the house texting me.
Oh. Yeah, workers outside making Lacey go crazy here yesterday, and
right.
It's always something, right?
You always got distractions. Welcome to life, I guess.
Property ownership.
Yeah, I know.
Let's take a quick look at the other markets that we kind of focus on here. Here's crude oil, November, tested all the way up to that trend line, the bottom of the Daniel, and it has come off considerably from that level. That was a sweet looking level. I'm hoping that So Crude Dan was able to take advantage of that. And then GC, we got gold. Similar but different. We came down, closed the gap to the island low, found this trend line, and now the market has turned around. So all of the overnight inventory in gold is currently freaking out because they're losing money now. The money is being taken away, so they're starting to freak. This would be pretty much of an inventory adjustment. They came, they looked, they saw, they failed. Now the move is to the other direction. Not saying I want to jump into this because looking at the daily chart here, we've tested to the low end of the area of balance. This trend line here, this trend line here, this held. I don't want to, I'm not looking for shorts unless we can start to see some acceptance below that level.
Sean, if that's really your trade, which I do believe you, wow. Got short 15.020, which I've been like jonesing to wish I would have got back in around that level because I was looking at the 10s and the 08s and the 15s and I would have never been stopped out. But I didn't hold it. You did. And you reversed to a long, John. Listen to this. Reversed
I know, I'm seeing it.
Come on, man. That is called carving a turkey right there, man. Wow. And out at 940. You better not be upset that you missed out on another 20 handles where it's traded right now. Hell of a trade.
Well, I want to take a second here and talk about something that our coach Robert is doing this evening at 6 p.m. Central Time in Discord. He is going to have a class, chart types overview. He's going to talk about 6 various types of charts available and how they may be used in trading different styles and different markets. He's going to explore traditional candles, Renko, range bars, Heiken Ashi, and bid-ask volume, as well as the TPO chart, my favorite. Robert, it's going to be a great class.
Put that in the JD, put that in the Cryon, and then we can, unless we have a schedule that we can share, I just want people to kind of screenshot it or memory shot it.
Yeah,
man, Sean, I'm really impressed with that carve up. Are you in the trading combine? Are you at the personal brokerage account? Are you at the funded level? Let us know. Drone King, I'm right there with you. I love how you broke it down. I think I'm gonna make a good decision. Might stay out of the market, Hoag, he says, or I don't know who it is exactly. Sorry, of the market today because I don't like how it's acting. Up $115. Might not take another trade. That's a W.
It's nothing wrong with that. It's a good day. Any positive day.
Yeah, you can put a W on the screen right or on your board. A blue post-it. Yeah. I mean, I haven't had a winner. I'm down 700. I haven't had a winner
today
all morning. Right. Yeah, it's a little bummer because I came in here right before the show started. I think today could be a good day. Jamming to Taylor Swift and Lady Gaga on the way here. And then you get the markets that go, hey, pay attention.
Did you, and I'm asking as your trading buddy, did you do your homework?
I tuned in for opening call, correct. I think that's part of my homework, yeah. I stayed true to my trading plan.
MP, I'm trying to cheer you up right now. I got your picture from yesterday of the drive.
Oh, yeah, thanks. Okay, cool. Guys, that was my drive-in, not today, but that was yesterday. Like 6 something. One other guy on the road with me.
Yeah, there you go.
What time frame do I trade? 30 minutes. Yeah, that's on the way to Snowmass. and I get the what I love about the mountains is you get the sun on the mountains first before it hits the lower elevation. Lower elevation. Colorado is Colorado. That's Aspen Snowmass. It's Snowmass, Colorado. Pulling into Snowmass Village, right outside, like that close, outside Aspen. Yeah, so you see that sun on top of the mountains, and it just is like it makes me smile all the time. I grew up in Nebraska, and driving around in Nebraska, I mean, there wasn't really anything that just like you could look around and be like, oh man, that's beautiful. Now, if you went out to the Sandhills out in the panhandle of Nebraska, Lake McConaughey's out there. I mean, it's just like, wow. But it's flat. I don't like flat land.
Well, I mean, you got enough of that growing up.
You got enough of that growing up. And I love how Denver's always like, you flatlanders. I'm like, okay, come on, dude.
That's what they used to call Illinoisans in Wisconsin. We were always flatlanders.
Yeah. And they are technically flat in Denver, but they call themselves the Front Range.
The foothills, right?
I mean, technically, it's completely flat from
Denver
to like Nebraska, which is the foothills. Yeah, Sandhills, foothills is Nebraska Panhandle.
MP Loki in the chat's an instructor at Keystone. Says, let me know if you ever come to Summit County.
Love Keystone. What was that? There's a run in the back. I was like, I'd have to look at it. 62 miles an hour is the fastest, I think. I'm sure you're much faster if you're a ski instructor. But
I have also been to Keystone, but I think it was like the first. I mean, it was a long time ago. It was like the first phase of it. There's like the back of it now. That it's gotten so much bigger, but it was a blast. I loved it.
Don, did you see that? I'm not talking politics, but that Bobert in the theater. Wow.
Hey, that goes beyond politics, man. That's that's funny.
You brought it out. I mean, you brought it out to the public. Ah, man, bold or stupid. Oh, Loki, Keystone is fun. A Basin is fun. Copper is fun. Vale is fun. You know what's not fun? Sorry, guys. Breckenridge. It's like you go on and off a freeway, and then they have literally. I mean, you see people getting hurt all the time. Just I don't know.
Really?
Amateur. It's just amateur hour. It's like it's like a suburb of Nebraska. Like I grew up, and that's like your hot spot. You talk about Breckenridge from Nebraska. Nothing wrong with that, but there's so many other better spots. The town of Breckenridge is cool. Go up for champagne snow up in Steamboat. If you really want to get great snow, you go to Wolf Creek. Best snow in Colorado. It's even their motto.
What is champagne snow?
Pinkish snow. There's cold smoke in Big Sky, which is so cold that when you're like really like like say you're skiing with somebody and they dust you, it looks it's just like it looks like smoke. Because it's and then there's Taos where it glitters because it's just so dry down in New Mexico. It's just so, and then you got Sierra Cement up in Whistler and Tahoe, where it gets a little warmer, and then your ski stick. Just so much fun when you get to know the snow.
Yeah, Colorado snow is different than anywhere else. Yeah,
I'd say the best snow, and you guys could probably push back, is Utah. I think you can sweep it. No, it's not scooping. You sweep it. It's dry because it's dry. You got the Salt Lakes out there.
Right.
You got Alta. You got Snowbird. Silverton. Cool town for sure. Okay, I'm getting some backing on my Utah. Thanks, guys. Brody, I'm Snowmass. Snowmass is this camera right here is 50 yards away from the Snowmass lift. Yeah, Utah is golden. Only thing I don't like about Utah is I think bars are closed on Sundays or something's closed on Sundays. I mean, it has a lot of laws that kind of slow down an operate type of guy.
Yeah. We just got to make sure you're prepared for Sundays because you got to have provisions.
Yes, sir. Yes, exactly. And I think their alcohol content's lower, but either way, it's probably good for
3-2 beer.
3-2 beer, yeah. Well, Christian would probably know. I'm Utah based. Definitely like Utah.
Well, if you guys are ready to talk some crude oil in a few, I think we have Dan in the wings.
Ah, yes.
Done it. Let's do it.
All right.
What do you stand for, Danny?
In that case, we'll take a few second break and be back with Dan to talk So Crude. See you in a few.
In a few. Dan. What's going on, buddy?
Oh, good morning, gentlemen. How we doing?
Well, your mic's in the way. How deep are you unbuttoned on your shirt?
Not that deep. It's what I always do.
Okay, I didn't know. Thought you were Hasselhoffing it out of the gate. You must have a good position on it.
No, I don't have any position on. I ended up trading. Normally, I don't trade much throughout the day. Yesterday, I put a couple more trades on. Had a good little day. I think I sat down at about 10:30 last night. And I was looking at crude oil, and I was like, man, do I just put a couple on here tonight and see what happens overnight and wake up to a nice move? So at 10:30 last night, I did look at it. I liked the long side last night, but too much risk. I didn't do anything. I was not going to sleep with the position on. I'll do that if I've got like some hedge position on, but just an outright position. Nope. I like to watch those closely. So did not do anything last night. This morning I came in, huge rally. Hoag, where did we get to this morning?
The lower trend line of the Daniel.
Thought about shorting it. I was actually on, you guys have seen him, one of the risk managers, Brett. I was on a call with Brett this morning, and I said, do I take the short here? Do we like the short here at the low side of the Daniel, coming up to yesterday's value high? I'm like, do we like this? Do we like it? Do we like it? And just in talking about it, the break started to happen. I got like 20 points, 30 points from that. From the initial entry, and to me was not worth jumping into the trade at that point. Right. I sat on my hands. I've sat back, so have not taken a trade yet today. But yesterday was a good day. I think I did $2,000 yesterday, so we're looking at.
You put up another 1,000 after we left.
Yeah,
I say damn it because that's awesome.
I'm just jealous. I did 2 trades yesterday. You guys saw, I think, the first one, and then I did another one after that.
Yeah, I put up a total of $35. Wow.
Still a positive day.
One day, Mike.
The $3,000 week, so I'll take that. But now I'm down 700 a day. But we're talking about Danny. Danny, great trading. And then you're calm right now. You up $2,000. $2,000 is $100,000 a year if you average that. But you're gonna have winners and you're gonna have losers.
Yeah, I mean, to me, it's, some days are good, some are bad. To me, yesterday, a $2,000 day, that's fine. I can tell you this much: 2,000 now it is a hell of a lot more than like 5 or 8 or 10,000 was back in the prop firm days. I could have a $10,000 or $15,000 day back then, and I ain't pocketing $2,000 of that. Oh, maybe I was if I'm doing my math, but like, it adds up a little bit differently these days. And to clarify, I think I was just shy of 2,000. So,
and Danny's pretty much mentioned all the fees, and then like I was like 50-50 profit split. I wasn't,
and that was generous.
Yeah.
I see the bottom line here. I want to make sure I'm saying this correctly. No trades today, up 3,000 this week on 4 trades.
And he did share a screen yesterday. We will share. If you question things, that is what we all should do, is ask questions, question everything. I used to have a sign at our old office as you walked out the door, question everything.
Yeah.
Right? Remember that?
Where was that?
That was on the way out where Hoag would do the glass.
Yes, it was that little square.
That little square above the thing.
Yeah, no, I remember that. Yeah, but we're going into the end of the week here, so to me, it's profitability. Coming into the end of the week is more important than anything. And I'm not pushing anything. If I see an opportunity today, I will take it. But I don't see an opportunity yet. To me, we have huge extension on this market. I know Hoag's, we can definitely bring up some of my charts here.
Sure.
I definitely like, some overnight trading when we look at the crude oil for sure. No doubt about it.
Right.
Especially because I do believe there's good volume and activity that comes in during the London session. And obviously it ramps up a little bit beforehand. Oh, I got to open up the app. 1 second.
Hey, Ghost, what you just said about that, my wife's a philosophy major, so man, I love talking to her, but it does go in circles, and I'm because everything is everything, and everything should be questioned. And she's like, "Is killing somebody good or evil?" I'm like, "What do you mean?" And then we'll get in this whole big thing.
Is killing someone good or evil?
Oh, come on,
That's where it
guys. Yeah,
starts.
she'll take me down a rabbit hole that I'm like, well, if we say the color is red, I get it. Like, we are the ones that define what it is, and well, I guess we are the ones that say like if things are good or evil, or bad.
All right, Jack, can you see him?
Yes, sirree.
Okay. Yeah, sorry about that. I'll show you guys some of the things I was looking at last night. So, for me, this is what I saw last night. I liked location here, right? So to me, when I look at charts and when I look at markets in general, I'm a simple guy. Like, I am a simple guy. Michael, I've taught you about the concept of Barney style. Like,
He calls it Barney style, and I'm like, what's that mean? He's like, Barney. I'm like, yeah,
I love you, you love me.
The purple dinosaur.
The purple dinosaur. You can't go. That thing, Barney can't go complex, or all the kids around him would bolt.
You got to keep it super easy. That's how I approach trading. I look for things that stand out, right? Like, so to me, right here, this is something that stands out. I look at yesterday's swing low. I come in last night. I see where the market's at. To me, there's opportunity there. Obviously, it broke down further before the rally, but that's the type of the stuff that I'm looking at. So I look at markets very simply. Actually, you can see, took the two trades. We got buys here, sells here, buy here, sell here. Both were right around $1,000 a pop. One was a little more, one was a little less. And so market rallies up. We look for things that just make sense. So this is what I like this morning. Swing highs from yesterday. Where we start to see rejection here today. Actually, we kind of like the little bit of rejection we're seeing right now, guys.
On the downside?
Yeah. We're short 3 right now.
I like it, Danny.
We're going to short a few. We'll see what happens. I'm not looking for huge move back to settlement price, although that'd be awesome. But right now, we're showing, to me, I'm seeing rejection at yesterday's swing high, which if you look, we saw in Hoag charts. I don't look at regular session volume profile. Hoag does. But this is regular session volume profile, value area high. So we have a good area of rejection. We'll take a short. Maybe we'll close the gap.
There you go.
We'll
Awesome.
All right,
Well,
we're up $200. Hey, how about that? 420 right now. 390.
For keeping it simple, Danny, your entries were straightforward.
Barney style. Break it down by the numbers. That's what we used to say. I learned that in boot camp when I was in the Marine Corps.
Did boot camp teach you to be disciplined, or were you already disciplined prior?
It's important to know.
Or did your dad kick you to the military because of you didn't have discipline?
It's important to know that discipline, the only way you can be disciplined is by having accountability. If you don't have any sort of accountability to something, discipline is just a term and a word. So in the Marine Corps, especially in boot camp, let's just say I put my hands in my pockets. That's a major no-no.
Why?
You don't ask why. It's just a no. You're not tactically ready. If your hands are in your pockets, what happens if something happens? That's one of the justifications and reasonings behind it. But so if you do that, that's one. And why don't you do that? Well, not because someone told you no, but because you're really scared of the repercussion. So that is that's where I think discipline comes from. You got to have some accountability to the discipline.
Speaking of discipline, where's settlement again? Because you're coming down to it fairly swiftly.
Settlement's down
that's
here
a big move.
89.66.
Oh, that one. Okay, yesterday's settlement. Sorry.
Yeah, you're looking at you're over here looking at
Yeah.
Tuesdays.
Tuesday.
Huh. Okay, cool.
We need to see this market make a little push to the downside, or else this trade is going to be fading out, in my opinion. So we'll keep an eye on it.
We'll keep.
I got to see it go make another low on the 30-minute candlestick. So that's what I'm gonna look for.
We'll keep the money in your pocket, Danny.
Getting a little push.
Keep the money in your pocket. You're up five small stacks.
Yeah, looking good.
What do they call it? Like stacks? There's like a
$5 bills.
$5 bills. When you get to a stack, it's 1,000 or 10,000. Well, I know I was out to dinner with a guy. He's like, yeah, so and so gets 100 sticks. 100 sticks. 100 million. When he opens there's a guy he knows that I met that's opening up a casino right when the F1 race is happening.
So a stick is $1 million?
Stick is $1 million here in Aspen, I guess.
I never learned that. I guess I'm not that cool.
No, I got
to start making some sticks.
Yeah, I wasn't going to be like 10 sticks. Okay, I can't say $10,000 because that's like $100,000. And he leaned in, but he's like, it's 10 sticks. And I'm like, no chances of $1 million. Then I go, 100 million? He's like, yeah. I'm like,
where does that come from? A stick? Does anyone in the comments know?
I don't know. What do they call? Don't they call stacks? What's the short term for 10 grand?
It's a stack, or is a stack? I don't know. We might have to pull up. I know there's some music out there that explains these.
Yeah, this is not exactly the metric system that we're talking about. I think you can make a stack what you want.
Stack. I just know stacks on stacks on stacks.
Make a rack, you got $1,000. Okay, Alexander saying make a rack, you got $1,000.
Okay. The things I learn.
Sticks. Maybe sticks. Yeah, 5 sticks to Wendy. Okay.
I like that. Aspen lingo, 1 stick equals 1 million.
I know. Then the next day I'm like, oh yeah. I mean, there's some crazy stories.
Well, maybe one day my trading will bring a solid stick.
Amanda says a rack is 1,000, a stack is 10,000.
Okay, I'm writing this down because we're gonna start doing. We like lingo here: handles and racks and stacks, racks on racks on racks. Okay, so hold on.
Hey, can you tell this crude oil to break a little harder for me?
Yes, of course.
Racks is 1,000.
That's what one of them was saying.
Stacks is 10,000.
10K is a dime.
Hold on, 10K. I have heard 10K is a dime.
I thought that was a stack.
Well, stack is 10K.
So 10K is a stack, which is also a dime.
Rooster, a drumstick is 10 million. Oh my god! I'm just gonna have urban. I'm having Urban Dictionary on my bookmark.
Rooster doesn't like when I talk chicken bones.
What a
chicken wing
treat this morning. What a treat. We get a trade on. It's been pretty pathetic. I need this thing.
Okay. Dan, you got to get out of here because we're going to start talking NASDAQ and you got your nice crude on. So we want to follow up on your crude and hear where that's at.
Yeah, we got to get a break. If we don't see any break, I'll be closing this thing out pretty quickly. I'm looking. Yep. I need movement to the downside.
Yep.
And it's not. It's showing weakness. So, and here we go. Now it's going against. We'll see what happens.
Whenever I start talking to a market, it just never goes my way.
I used to stand underneath one of the TVs in the pit, and if I needed the market to go, I'd blow on the screen, and it always worked. I go, it always worked. And I knew a guy that would sit there, and he would try and lift it up or lower it on his screen, like it was a touch screen on the dome. That's what he would do.
You swat at it.
Yeah.
You put what on the screen?
He would just like swat at it and like try and push it down like it was a touch screen. And then he's like, there it goes. There it goes. Come on. You know?
Yeah.
It's weird things.
You missed my joke over your head.
I didn't catch your joke.
No, I can't repeat it. You have to go back. You have to go back. All right, Danny, I appreciate it.
You guys have a good one.
Yeah, you too.
All right, Dan. All right.
All right, John. We're back here where all the frustration started by getting out early.
Mm-hmm.
15,000, got all those week longs out of there, right? Even the longer time, even a bit longer time frame folks, right?
Well, I mean, the overnight inventory was short, and it still seems to me like they're still holding pat. If we take out the high, the S&P high is the high of the opening range. That might scare a few more. Although, as long as we're staying here range bound, this is doing a lot to reconciling a lot of this overnight inventory. The longer it sits around here, the more people are going to just flatten up and look for the next opportunity. So, the things that I'm focusing on right now. I mean, this is the high of the S&P. The opening range is the high of the S&Ps. We got up there. We were looking at the NAS chart, so I didn't get to execute there. Came back all the way to halfway. I mean, in essence, what is setting up is what's called a normal trading day. Michael, a normal trading day is when the range for the first hour or the initial balance remains an extreme for the entire day. Now, this is only a 20-point range, a 20-point initial balance. It's not going to take a lot of energy to extend outside of it. The delta, we're starting to look positive now. We had really negative delta on the low. We're starting to see positive delta on the high. We're not seeing any longer time frame accumulation according to that.
Okay.
So, I'm kind of sitting on my hands, and I do that a lot, but because, here's the NASDAQ, initial balance high, initial balance low. It hasn't been extended.
What price levels?
It's $100 range, 100 handle range. So the high is 15,020. The low, these are approximates, 14,919. So it's 100-point range. What have we seen in the past? Yesterday was a 288-point range. The day before, 160-point range. The day before, 118 handle range, 271 handle range. So we're looking at a lower than average range after an FOMC meeting. This is highly unlikely to remain a normal trading day. The question is, when is it going to break out? What direction is it going to break out?
Well, it's given us two whips from the upside to the downside of 100 handles. So technically, I mean, it has moved 200 handles.
Yes.
Yeah.
I mean, if you're going linear, you went 100 down and 100 up.
Almost 100 up. But we did, ish. Okay. And we got a lot of people that have made money on this. So that's great.
Yeah, one guy that carved up that 15 lot. That was amazing.
Probably the best trade. Who was that? If you're still here, I got to get your name. We got to write this down. Because that was just I mean, you took no heat off the high, and you took two points heat off the low. I've never that's just go buy a lottery ticket today too.
Yeah, right. Yeah, and it's always fun when those things happen, but it's I always considered it by accident. I know I'm not that good.
Yeah, but these are just fun day. You walk with a skip in your step by the end when the market closes today, for sure. As long as you keep it. If you give that money back, there's nothing more painful than carving the market up and then going, well, I'm up 4,800. Why don't I just get it to 5,000? You ever been like that, John? And then
yes. Then the next trade is a loss, and the next trade is a loss, and now you're chasing money, and you want to get that money back, and you end up pissing away the entire day plus.
And then your emotions are just like they have overwhelmed you. AK trading on tilt, different type of tilt. We're talking about the tilt indicator, way different.
Right.
Well, not way different, but
it was an issue for me. Trying to make 40 ticks a day, and my clerk would say, you're up 38 ticks. That's close enough. Let's just go. And I'd say, well, I'm just gonna let me make a couple of more ticks so I can say that I reached my goal. And if that next trade is a loss, now you're not chasing 2 ticks. You're chasing 10 ticks. and then you take another trade, and if that's a loss, now you're chasing 30 ticks to get back to where you were, and that's when you would snap and you would just trade emotionally and overtrade and do all of those things that you're not supposed to do. Yep. And when that happens to you a few times, it's almost like putting your hand on a hot stove, right? You do that enough, you're going to figure out it hurts to put your hand on a hot stove. So eventually you're going to stop, but hopefully.
Yeah.
Hey, there he is.
Major trap for traders. I agree. ICT, major trap for traders. Emotions can get the best of you, and then, oh my God. Then you just made trading about 10 times harder.
Right? And it's already hard.
And it's already difficult, I would say. Totally doable if you can manage your emotions, control your behaviors, and you clicked on that trading checklist, which is just a trading plan, and you have a good trading plan that you're honing and working with, and you're journaling.
You're doing all the homework. You got to do all the homework.
And you're talking to your trading buddy. Eddie, you back?
Booster. Go. Retro. Go. Vital. We go fly. Guidance. Guidance, go.
I'm back. Check.
We've missed you.
Yeah, my social worker was at the front door, and I don't know what happened. I think I saw this big glowing light over my house. Somebody wanted to probe me. I said no. I got a job to do here, and I'm back.
So you had a what do they call them now? EAPs. UFO.
Ladies and gentlemen, can I please have your attention?
Yes, I'm back. I guess so.
Looks like I picked the wrong week to quit amphetamines.
Yeah, this is I had no idea. So I'm back.
Hey, really quickly, Robert, are you correct? And why didn't Sean tell us? Sean is the individual who carved the markets. You know how Hogan Eddie, you know how we always talk about we pull up the best and put them on live accounts?
Yes.
I just found out he's a live trader. Our live trader, if this is true, our live trader, which is the reason why we bring you up to XFA, we see how you trade there. You can still take payouts. You can still do that. But once you start crushing it, we quickly pull you up to a live account, pro ball playing, and because we want you on the live account at that point. He's live and he put up $5,000. And if I'm looking at it correctly, he's got 15 in his account. I don't know how much it's true, they say. I don't know how much he has taken in payouts. But to have a live trader that carved up the market better than I ever seen. Now, we do have his positions, and we're saying it's true. So it's like, damn. So now, Sean, if you have called it a day, which I bet you're a smart trader and aren't even on here anymore because you took the money and ran.
Yeah.
We're going to call you up, and you're going to come on here. Hopefully, we'll incentivize you if you need it to talk next Thursday. And then Eddie, I want you to wear an apron that has a turkey on it, and I want you to bring 2 knives and
carve it up.
Yeah.
Sean did say he would be happy to share his charts one day if he wanted.
Well, there you go.
Get him on here.
Yeah, we're going to get him on there. So, to Sean, your profits in your account and your live account are burning a hole in our prop firm account. So you better be taking profits. If you don't take profits, guys, why the hell are we trading?
Got my back scratcher here. Sorry about that.
I must interject on that. You're talking about frustration. I saw someone on the screens break their screen, get frustrated with the trade, and use a back scratcher to destroy a monitor. And then be shut out of the trade because the screen there's a back scratcher sticking out of the screen. And there's nothing more embarrassing than then calling IT and saying, I need a new monitor.
Back scratcher.
You guys both have them.
Back scratcher. You get old, you get these things, It's, the wife, she won't scratch my back anymore. No, you scratch your own back. Back scratcher.
Yeah, before I got married, my wife used to always give me massages, like on the head.
Yeah.
And then after that, she basically said I should schedule time with a massage therapist. Started outsourcing.
I hope Danny's still short.
If Danny's still short, that's great. Really quickly on Sean, who carved up the markets, it is true. Started Topstep July 5th or started getting funded July 5th. Either way, he's 2 days on his live funded account, which means he was in XFA. And then Mick, if you're listening, risk managers, if you're listening and you're coming on for tap on the shoulder, I would love to know a little bit more detail on Sean. Sean clearly shut his system off, took the money, and ran. Good for him.
Good man.
Mm-hmm. Look at that crude. Danny took it off.
Oh, he did?
No, well, no, he still had it on when we were there, and he's taking
it was still on. He said if it didn't start heading his way pretty soon, he was gonna take it off. But I'm just hoping he has it still on. I mean, we're halfway to settlement, which was his goal.
We can follow up with Danny.
Let's do. Can we follow up with the win streak, folks? Do we know what they're doing today?
We don't have that information live during the day. We get it at the end of the day.
Our risk managers do, but I'll let you guys figure that out.
My.
Mm-hmm.
Well, you know what we've got here today? I mean, 11 o'clock, we've got one of our funded traders, Dylan, going to be with us. And we're going to check out his journey from beginning to today. And we'll be doing that here, 11 o'clock Central. If you have watched the funded trader interviews, it's going to be sort of the same premise, but we're calling it Powered Players now. So Dylan's going to be with us, and hey, if you have been funded, you might get that call. We'd be very happy if you can join us,
or call us, Eddie.
Have a little fun. Yeah, I mean, if things are looking good and you want to share your journey, we would appreciate it, and I guarantee those that are listening really do appreciate it. So time to shine, my friend. And of course, 12 o'clock, high noon with Jack Doherty. Jack's going to be with us here. One of our all-star coaches, you know, Jack. And I'll be with him, and we'll be taking questions. Remember, if we could put that link in the room for questions. If you do have questions, remember the email questions get answered first. And then we're going to take the live questions here in our YouTube channel or our Discord channel. So let's have at it. Let's have some fun today.
Hey, you know whose birthday it is?
Whose birthday?
Bill Murray.
Oh, my favorite.
Yeah, Bill Murray. It's his birthday today. Happy birthday, you big goofball.
It's Bill Murray. And, you know, one of the movies he had that I really liked was Meatballs.
Attention, here's an update on tonight's dinner. It was veal. I repeat, veal.
You gotta love Bill Murray.
God, he's great.
Veal. It was actually in the movie. It's a contest. They had to guess what kind of meat it was, and somebody won saying it was mystery meat.
All right, can you jump to the 30-minute NASDAQ?
Okay. Mm-hmm. Here you go.
Eddie, we got any stats coming? Anything that's good?
You know what? We're going to be pulling some up here in just a few, getting an idea of what we've got going.
Tilt is 60% long, pretty much for the sisters. And the cousin crude is 76% short. So crude oil traders, pretty big bias to the short side. Equity index traders, you're 50-50 for the most part. I mean, 60-40, but like that's nothing. There's no tilt happening. And tilt happens, just so everybody knows, honestly, around 75-80. I mean, if it's 90%, I'll let you know. And someday you'll know in real time if you're trading with Topstep only. If it's going to be not, you'll find out. We'll all talk about when it gets to like 80% or 90%. And then what does the market do?
Sometimes it will run out of gas in that direction.
and then sometimes it will pay that direction.
Sometimes they'll get paid. Yep, you got
We
it.
call it the market giveth and the market taketh
Take it away.
from the tilt lean.
Yep.
For I shall take away from you because I am the market. It's a beast, man. It's a beast. It's like it'll chew you up, spit you out. It don't care who you are.
That's the Wizard. That was the Wizard of Oz behind the curtain.
Yeah, right.
There's
Pay
your
no
market.
attention to the man behind the curtain. You silly scarecrow.
I mean, I still remember when the were they flying monkeys or something like that that had that had the skate that scared
was
the hell out of
scary
me. And then
shit,
what was the other
man.
one that they changed the head or something? Man,
Jeez, that was weird. That was somebody was dropping something.
Everybody was afraid of.
Yeah,
Everybody was
little
afraid of
LSD back in the 30s, the late 30s.
psychedelics was hitting the market then.
Yeah,
Everybody was afraid of those monkeys.
man, they were scary.
Yeah, as a kid, they were scary.
You know
Those
what?
ruby slippers are worth millions. Millions.
Are they really?
Yes. So I think there was like 3 or 4 pair. And,
John, I need
ahead.
some. No, sorry. I need some help on this NASDAQ. Down today. I do like the fact that it's controlled down. It's not anything that I'm like, okay, 700 down. It's still 3K on the week. It's still 2,300. Okay. But yesterday, put up nothing. Scratch day. Today,
Right.
I'm down.
So here's the profile. We've got a normal trading day started. Okay. Until that changes, the only thing to do is look at the extremes. Nothing in the middle. Only at the extremes.
So we're at the dead middle right now, pretty much.
We're pretty close to it. Yes. The dead middle is right about here. 14,969.
Okay.
So we're right in the middle. I wouldn't be doing anything in this area. You know, the market, as far as the auction, it's just an open auction. It's tested higher, it's tested lower. It got to this extreme, wouldn't go, got to this extreme, wouldn't go. So you focus on those extremes to look for your opportunities. You know, there have been a couple of opportunities in the S&Ps that I've missed. My favorite would be to look for a short up near the highs and then to have it break out the lows. Now the S&Ps are a little bit different. NASDAQ is right in the middle. If we were to look at the S&Ps now with the profiles, we're down here near value low, but I don't like the long. Why? Opening range, the high of the day, the late spike, the lack of the gap close, the nuances are lining up to say this thing is more likely going to continue lower than to turn around and rip to the upside. The only thing we had to rip to the upside was overnight inventory. And we've been kind of hanging around here, kind of using up all that overnight inventory. It's probably pretty reconciled by now. Now it may become a directional market. So, you know, keep an eye on this profile. And if there's something that I want to do here, I'm going to do it.
Hey, I have an update on Dan's position, by the way, that I can share with us.
All right, what do you got? Danny's
All right.
position.
You should be able to read this, but he held it until 9:53. So,
Oh, nice.
so he bought back.
So he picked up 2 yesterday, and he's got a 1,000 today.
Yeah,
Nice. Good job.
Damn you, Danny, for trading well.
Yeah, very nice.
$3,000 in a week. I mean, if you're shooting for like 20, 50, all that kind of stuff like that, those are like very, very tough. I mean, you're carving the market up like Sean almost daily. And then you got to put the size on and then carve the market up too. But you can do all this. But the point of the story is like $3,000 is a kick-ass week.
Oh, yeah.
And Danny just did that. That was like a half an hour trade yesterday. I don't know how much. And Danny he manages like, I don't know, 7 people on the Topstep side of things. So so you can have 2 jobs and 2 income streams if you want to look at it that way. And you can manage people, which people management is very tough to work, with. And then you also got to lead the department, all that kind of stuff. Danny, nice work.
Good stuff. All right.
Yeah. Managing people is very difficult. I had, 10, 15, sometimes even 20 people working for me on the trading floor, and it is difficult.
Uh-huh.
So hats off. You're able to manage people and trade.
Mm-hmm.
That's like being on the old trading floor.
Right?
Yeah. Oh, yeah. But on the old trading floor, there was no time for stopping anything.
No.
It was like you light the wick, and you couldn't put it out until the closing bell.
Right. Yeah, and there wasn't really time to talk about, your career aspirations or like how you're feeling down there.
What you had for dinner last night and what you watched on TV.
Nobody talking. Yeah, it's just like straight when you walk in there.
Though,
Well, when
like
it's slowed
days-
down, yeah.
Dead days, right.
Yeah.
It was a different management style than is currently used in most corporations.
Quite different, I would say.
Oh, you mean getting screamed at? Yeah. I wish I had saved the email I got that had 30 F-bombs in it in my first week. It's something
my
to cherish.
goodness.
Oh, the email had that?
Yeah, because I was working nights, so they would call, and occasionally someone. This one guy, he had kids and totally calmed down, but before that, man, he was a hothead.
Wow.
Man, I think having kids might stress you out even more. But yeah, that's to get a bunch of F-bombs and emails.
It's
Yeah.
hilarious to see that in an email, though.
See,
I have a shitload of.
I was gonna say on the trading floor, you'd hear people getting reamed right in front of you. Just screaming and yelling at their clerks or their phone clerks yelling at the broker or the. I had a manager at First Chicago that when there was an issue, he pulled us aside, and I give him total respect for that. Instead of yelling in front of 5,000 people, he'd pull you aside and he'd talk to you, and it was like that really it cut through, and you understood what he wanted.
Remember, as when the locals would have a one would be across the pit, and they'd start screaming at each other across the pit, and then they both meet in the middle of the pit, and they're right face to face. Remember, the locals are traders that trade their own capital, just so everybody knows. And if you hit somebody with your open hand, it was cheaper than hitting them with the fist.
Mm-hmm.
Yeah. So if you close your hand and you hit them, that was a big fine plus a suspension.
15.
And if you opened your hand, it was a smaller fine, and I think a less suspension. And if you spit on them, which you would see that, it was a fine. They had these different tiers, and then they would put it up as you're coming into the trading floor on a wall board. Like they print out.
It was like a sports page.
Yeah, John Doe
Boxing sports page.
fined and suspended for 30 days. It's just like NBA, like.
Yeah, they're fine.
Oh, that was, and you'd stop and read it, Wow.
And the funny thing about it too, most of these guys would be like, half an hour after the fight, they'd be like, "Hey, Chuck, where do you want to go for lunch? I'm going to be doing lunch over here." Yeah. I swear to God, they would yell and scream and push and shove and punch and kick, and then
you see him walking in the pit later on after they grab lunch.
How's the kids? Oh, they're okay.
How's the hypertension?
Yeah.
Yeah. I mean, you got wound up. I mean, to a point where you just got to release, otherwise you're going to explode, and that's basically what happened.
Joey, it was like hockey fights, right? For the most part, yeah.
Exactly.
And it was like it's like UFC. After you're done, you shake the guy's hand.
Yeah. It'd be like, "You want to fight? You want to fight? Okay, let's fight." And then how about the guys that would take it outside? Let's go outside.
Oh, and then they had to take it. Remember this, Eddie? People take it outside, and then the Board of Trade goes, they're like, no, you're still getting fined because you're on our property.
Mm-hmm.
And then they just go right across the street.
Yeah, as long as you were not on the security cameras, you were probably going to be okay. But they did have one member at the Board of Trade act up and jump onto the field at a White Sox game once. And they saw him on TV, and they find him.
Cubs game, right?
Was it a Cubs game?
It was a Cubs game, and the Cubs are leading. And this is a bit where I won't say his name. Nobody's going to say his name, but big time brokerage family down there, and he. This is the story. He's sitting front row or whatever down there by behind dugout, and he goes, "If this pitcher, they put in a relief pitcher, they were up in the game, and he got shelled, and pretty much he's like, if he throws one more and they go, they go down, I'm gonna jump this thing and tackle him." Next pitch, the guy hit it out of the park or something. He jumps over.
That's right.
And goes to attack the pitcher. Swear to God. And you can look this up.
Right to the mound and tackle him.
Right to the mound, like he's charging the mound, and the pitcher sees him and beats the shit out of him. Swear to God.
Ouchie, ouchie,
and then
ouchie,
Sport of
ouchie.
Trade suspended him for a month because he just represented. Because in the newspapers, like CBOT trader charges mound.
Yes, fans in Chicago, we love to love, and we don't really hate, but we want to punch. It's beyond hate.
Yeah,
we're big. We show our colors. So
I found, country kid moving from Nebraska to Chicago. Yes, it was quite different. There's a little bit of strength or aggression or. And I would see it you'd go to the bars, and man,
that would be it.
There would be it.
Hey, we've got Andre on the meter here. And, I talked to Andre yesterday, and I was like, dude, man, you just got that information like rapid fire. I mean, the stuff that Andre says, bah, 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 and it's like, wow, that's great stuff. And I had to compliment him on it. And what I've got here, I think when we bring him in, I've given him a new nickname. And his new nickname is Machine Gun McHugh. So I figured that when he comes in, we can
call him. I mean, rapid fire when it comes to information. Yeah.
Boom. I mean, it's valuable. It's I'm trying to write stuff down. I can't. But let's bring him in. We're going to take just a few minutes here. Randy Myers was the pitcher. That's right. We're going to bring our good friend Dre on here for some shop talk. Be right back. What's up, Machine Gun? What are you doing, man?
You're sticking with that, aren't you?
Dude, I tell you, yesterday you were like, I was like, man, I was picking up my jaw off the ground. I go, just listen to him. Go, Andre, go.
That's FOMC days to get the juices flowing.
You got them juices, yeah.
Andre knows a lot of information. Then you go into pop culture, and he probably knows more information.
I don't know about that.
Machine Gun McHugh.
Hey, who is that trader? Who is the trader that charged the mound?
I don't know. Somebody put the link to the article in there. If
I got
it's still an article, then we're
There's got to
live.
be a video.
Yeah, let's not name the name, but we have given you the tools. We're teaching people to fish here, right?
Yeah.
Very easy. Give you the name and
Here's the knife, son. Don't cut yourself.
Nothing comes back to us. So there you go. We
Google
heard this story. We heard about this story from a friend.
Yeah, I'll Google it later. That's a great story, though. Hey, Hoag, these 4400s and the S&Ps, man. We're testing them. We're testing them.
Big fat round number.
Big fat round number. I think we can break them. At least we're trying to.
Well, all the nuances that other than the overnight inventory are pointing in that direction.
Yeah.
We just tested again to the low here. We've been unable to extend the range. But that's what I'm kind of looking for. I missed my opportunity when we got back to the opening range to get to short. We were on a different chart. So I'm going to be kind of cautious and maybe time stop a short if we extend the range to the downside.
Yeah.
Really quickly, JD, with no DMs, no giving the names, Topstep just heard this information from a bird, but we'll move on for it. So,
what about the fight?
Yeah, we don't need we just heard this story.
Is it on YouTube? Hopefully it's on YouTube.
Yeah, well, there you guys go. Nothing comes from Topstep besides rumors that we've heard.
Well, I don't think we get in trouble for this one. But these 4400s, they're trying to defend it, but I don't know how much more power or how much more support we're going to find here.
Yeah, well, the more we reach it, the more we test it, the fewer buyers they're going to find down there.
So that's typically. I got a question. What's easier to break through, support or resistance, would you say?
Well, it slides faster than it glides. Yes.
So support?
I don't think there's either that's easier. It's all context based.
Okay.
You know, is it a support level off a weekly chart or is it off a 5-minute chart?
That's a good point. That's a good point. Oh, I guess I'm just thinking in terms of these 4,400s. I mean, it's just a fat round number. I don't know if there's any real significance about it, but clearly it's acting like support right now.
Mm-hmm.
I think they're going to try to test it, and who knows if it's going to be any follow through. But I mean,
okay. So Andre, you look at this.
Yeah, what do you got?
Here's our current low, right here. Okay, our current low is 43.9875.
Yep.
The swing low from the 18th of August, right here, 43.9775.
Oh, okay.
So we're very close to that. This might be part of why we're seeing some support here.
Right on. Yeah.
Longer term level, it's probably a little bit more important than something you're going to see on a 5-minute chart.
That's what I look at. I look at 5-minute charts too much. But yeah, no, that's good stuff. Okay, so that is a level. What'd you say, August 18th?
Yes, August 18th low in the December contract.
So about a month ago then.
Yes, it was before it was the front month. And whenever I have available information from the current month, I use that information.
Right. No, that makes sense. Okay, cool. All right, we'll see how it plays, and we'll see how long we hang out around these prices. Anyway, so I kind of wanted to touch on what went down yesterday with the Fed talk. I think we really need to, after giving me some time to digest and talk to some people, I think we need to really listen to what they're saying and what they're telling us, that these interest rates are here to stay, and they've told us that we got another hike coming. We don't know if they're starting to push it out to the hike coming to the December meeting. Mm-hmm. But I mean, these interest rates are here to stay. I don't think they're going anywhere. As far as a cut, everyone's hoping and praying for an interest rate cut next year, first half of 2024. I mean, the Fed just said they're going to push that out. So I think we kind of really need to pay attention to what the hell the Fed's saying. Let's not fight it. What's the old adage? Don't fight the Fed.
No.
So these rates are here to stay.
When they tell you they're a liar, you got to believe them.
I like that for sure, though. I mean, so 10-year highest is trading as highest yield since 2007 right now. The market's telling us what's happening, what's going to be coming. So, like I said, let's not fight the Fed, and there's a definite trend forming. That's why I think these 4,400s are susceptible to being broken in the near term. I'm sure in the long term it's a good buy.
So really quickly, what is like a 10-year fixed or 30-year fixed mortgage going for right now?
It's a good question.
Anybody,
yesterday the numbers came out. For the previous week, the average mortgage rate was 7.31%. It's up 0.04% from the previous week.
Okay, so I want to know here, because this is called golden handcuffs, in my opinion. How many people here have a mortgage, and give us the rate that you're at? Because like the market's moved up so fast that mortgages are 7.25%, and if you have, I have a 2.68.
Look at you! Look at you!
I got it June of 2020 or July, something like that. When the markets just go free money. Remember 2020? Free. Everybody gets money. Everybody gets money. Oh, and by the way, interest rate cuts down to here. 21 handle, Dave, 2.75. I got you beat by couple. I got 268, 275, 275. 275. Guys, we will never, this is my take, we will never want to pay off those interest rates. Because like you could spread it right now in T-bills. If you got 100 grand, I'm going to put 100 grand, pay down some of my mortgage. Stop, go to T-bill, get 5%, and you're making the spread. Yep. David Scott, 7.5%.
Canadian. Wow.
Oh, maybe that's right now.
Yeah.
No, those
never pay them off. Yeah, golden handcuffs. But you're also stuck now in that home. So now, do you? This is where me and my wife have this going. You're stuck now in that home. So like, you follow me. You build a family, and then you have kids, and you're like, we need more rooms. So then you're like, damn it, I got to go buy a new house. And then because I have a 2-bedroom, because I've married my wife in a 2-bedroom or a 1-bedroom. Now we need to get 3 or 4, and then you got to get rid of your 2.7 or whatever. And then you're up at the 7s.
Right.
Ouch.
Keep it as a rental, Kevin. I agree, but then you still got to go up to the 7s because you got to expand your house. You just added, you got your 3rd kid, something, whatever. These stories are happening every day.
Mhm.
Stop having kids.
Get out.
Or get a bunch of sheds.
I like that.
Little Tommy, you got the one over there. Little Becky.
Oh, my own fort.
So we're short now. We broke out the low of the S&Ps. I'm short at 43.97 quarter.
Hell yeah.
Did not get the best trade location, but it's a time stop. I'm not going to let this go very far against me. I want the market to go my direction now.
Hell yeah. What's a time stop, John?
It means that if the market is going to go, it's going to have to go now.
Gotcha.
So like for an initial balance breakout trade, which this is.
Yes, it is.
I'm not going to risk a lot on it. I'm not going to be in it for a long time if it's priced against me. So right now we're sitting in profit, and I'm just going to watch this. And, if it comes in and it kind of re-enters the previous range, then I'll probably get out of this one because I want it to go now.
There's got to be some stops around here too.
60% of NASDAQ is short. 54% of S&P is short.
Okay.
63% of our cousin crude is short.
Okay.
Light shorts. I'm watching trades today because I haven't had a good, pretty
Good
much
experience.
I have not had a good experience. I've been at bat. Like we always talk baseball, and Eddie, you know this one.
Yeah.
Like to have a 300 batting average, you're a Hall of Famer. Because there's the Mendoza line. You guys look it up on Wikipedia or whatever. Mendoza line is 243 or 263%, and then
200.
200.
200.
200, and you can make the Hall of Fame.
No. The Mendoza line is if you're below it, you're not playing, even if you're an incredible defensive player. It's you can't.
Yes. Oh, it keeps you in the league, or you can hit the Hall of Fame. It's what Mendoza even do? Did Mendoza?
He was a player.
He was a player. Career average of like 200 or something like that.
But he hit the Hall of Fame or no?
Nah.
Oh, he just showed that was the baseline for staying at the major.
It's the opposite. It's if someone's below the Mendoza line, you are not going to be. You're going to be in AAA very soon.
Okay, thank you. So my point of story is like I've been up to bat. Every time I've been up to bat right now, struck out. So you see this, and then we have traders today that could share that they've struck out, but I've struck out pretty much every trade, and then I missed one. So I saw a pitch coming that I really liked and I'm good at, and I didn't take it, and strike. So there's another strikeout. So strike with your bat on your shoulder is you don't want to do.
Strikeout looking.
Strikeout. Thank you. That was a strikeout looking when I was short like 05s, 505s, and then the highs was really about 20. Travis, thanks, buddy. Yeah, I am below the Mendoza line today. But yeah,
I want to hear you explain the Mendoza line again, Michael.
Well, I mean, it's just like you get sent down to the minors, and we all know that. Eddie, and I'm going back to this because we always talk baseball. Like you don't win every baseball game. I mean, just like over 500. I mean, under 500 is the Cubs, but over 500, I don't know what it is this year. You said they're good, but we always talk baseball because like you don't have to be right all the time. You don't have to win all the time. So you don't have to hit the ball every time, but you do need to perform at a certain level to stay in the big leagues.
Mm.
Yeah, we should show them that metric, that grid that you guys like to adhere to with the profitability grid with winners and losers and win percentage and stuff. We should pop that in here every now and then.
Oh yeah,
I love that thing. I mean, it gives you an idea, a visual representation of where you kind of need to be.
How to keep the math on your side.
Keep the math on your side.
Yeah.
I got a picture of it, Jack. I'll send it to you unless you have it.
Yeah, I didn't mean to put you on the spot, but yeah, eventually we need to do. We should display that at least once a week, maybe.
Well, first I do have another image.
Ooh,
Eddie, you want to introduce it?
Let's do it.
All right.
Coming up here, pop it up here. Top live funded win rates. All right. Now, yesterday we had some that sort of hit the 13 run pool, and that was it. They had
Wow, I like this.
did very good. But what we've got right now, we've got Jordan. Jordan is number of trades today, 100% win rate. That's nice. 4 trades today. You know, you might be happy there. Mulai is 100% also with a deuce on the table, 2 trades. Hughes B, 81% with 126 trades.
Damn.
So you're putting the broker's kid through college.
Yeah. With this chart here, Eddie, I just want to give a caveat. Is because we said top. Obviously, with the top 2 people, there's a low number of trades, so we didn't want to just chop them off. But the bottom 3 are kind of impressive.
Yeah.
Sure are.
And Jack, I just sent you in the channel that you always like it, that image, because we're going to talk about win percentage here, but then this image is helpful to share the whole picture. And Hoag will share the whole picture and explain it. It's called keeping the math on your side. But go ahead.
Nice. And we have Alejandra with an 80%, 20 trades. I mean, that's a good day. Keep them busy. 80% with 20 trades. That's really good. And then we've got Wally G, not Allie G. It's Wally G, 77%, and with 77 trades. And number 77, Lyle Alzado.
Ooh.
Remember him? God rest his soul. So congratulations. Good job. I mean, the thing is, too, we're looking at the first 2, 4 trades, 2 trades. Hey, you can win a baseball game 1-0. You can win a hockey game 1-0. You can win a football game 2-0. All right. It's just a matter of getting it there. And maybe they have stopped at a point where they're very happy at their profits. So, yeah, good job.
That's a very good job. I was just going to ask you something about it.
That was impressive. 126 trades, 81 win percent. Damn, respect.
I can put it back up.
That's a hell of a week, let alone
live traders. Okay, so Sean's not on that list, but Sean hopefully will come talk to us. And anybody on this list, if the risk manager folks are watching, anybody that kind of we keep talking about on live funded, let's try to get them on every Thursday. We're going to be trying to get on the get the live traders on, and this is our way of kind of sharing. But also, it's very hard to get live traders on too, because they're like, I'm not going to like talk about my trading, because it's almost talking about them when they're in the game and all that kind of stuff. But we do have some that are willing to do it, and we're going to start bringing them on more and more.
Are they hesitant to get on here and talk about it?
Would you? I would.
Yeah, I would. I understand why. So I know some people like to talk about it, some people don't. So
I mean, it kind of jinxes. I would think like, yeah, I'm on a win streak, but I'm like, okay, I'll come talk, and the next thing you know, like I said, you're on the cover of Madden, and then you like blow out your knee the next game.
It's like you got a no hitter going, and they
Sports Illustrated.
Hey, yeah, would you like to go? We're talking to them.
Hey, you're really hot right now. Let's talk about this hot.
You have to maintain your humility.
Yeah.
Well, the market could take care of that easily.
There you go.
Snap. There it is. You guys are quick.
Let it be known that you sent this to me. Hopefully the Google police don't come after me for wherever you got this from. But if you know where you got it from, we can say that.
Yeah, that was my kid drawing a picture. A picture of it. He had it done this morning by 5 a.m.
At least he circled profitable.
He's on the payroll.
He goes, "Hey, Dad, this is what I need you to do today."
Yeah.
He taps it. He's like, "Now get out there and get him." I'm like, "What? 4 years old?"
Pat you on the butt.
Yeah.
Go get him, Dad.
That got me pretty good, Patak. That was a good one. So let's explain this there.
Hoag, you explain it.
Yeah, this is the Bible right here.
This is the Bible, guys.
So you see that there's along the top, there's percentage of winning trades. Along the left-hand side is the reward over risk ratio. So if let's just start with the 50% win rate at 1-to-1 reward over risk. If your winning trades and losing trades are equal and you're right half the time, here it says break even, but this doesn't take into effect the fact that you're paying commissions on every trade you make. So if you trade to 1-to-1 reward over risk and you're right half the time, you can still bleed out an account over time because you have to pay commissions. Now, if we take the next line across down, that's 2-to-1 reward over risk. at 2-to-1 reward over risk, if you can be profitable if you're only right 4 out of 10 trades. Every trade you take is, even just for an example, I don't trade this way. I don't suggest trading this way, but if you are going to make 200 on winners and lose 100 on losers, at 40%, you can maintain and build that account over time. Right? So let's go to 30%, the bar to the left, the one to the left there. If you're going to be able to maintain only a 30% winning trade percentage, you're going to need to be right 3 times what you risk on average for every trade you take. And then it gets tougher from there. I mean, when you're at 20% and you're at 5-to-1 reward over risk, you're maintaining or building the account, but it's difficult to find trades that are worth 5 times your risk. The bigger the number of reward over risk, the less likely you're going to be able to get to those levels. So if, let's say you're averaging 50% of the time you're right on trades, and your average reward over risk is 3-to-1, you can build an empire that way. If you can maintain those metrics over a long period of time, you're going to have a long and profitable life in trading. And the same at 2-to-1 reward over risk at 50% right, you should be able to you can build an empire that way if you do things right, and that's maintaining those better rewards than the risk you have to take and be right half the time. You should, even with a coin flip, probably over a long period of time, be able to be right half the time.
So, John, I'm hearing you say this. I'm a fairly new trader, and I go, whatever. I just go off my setups of my charts. What do you say to that trader? If it sets up on my charts, I take the trade.
Yeah. Like I mentioned the other day, if I don't see a 2-to-1 reward over risk on any trade that I take, I'm probably not going to take it.
Yeah. So I think the point too is, sure, trade your setups, but you got to look at your stats. You got to look at your stats and kind of say, okay, well, I was 2-to-1 because I stayed true to 30 handles, and I would stop was 15 handles. That's 2-to-1, but I was only right 20% of the time. Oh, clearly that's why I was down on the day. Then you start to go, all right, so if I stick with my brackets, my 2-to-1, 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 and I focus on great entries, then my batting average, go back to the Mendoza, then my batting average comes up, which means my winning rate goes to the 40, the 50, or even the 60. And you see how that's all profitable if I'm at a 2-to-1. So it's just kind of like, you got to understand your average. And that's why I always say use your brackets to always be like, hey, that's my average, or that will keep my average if you're always using brackets. If you're always using brackets and you get in, you always let the bracket hit, then there's your average. And then you just need that win rate to get higher, which means you win rate, to have a great win rate, you got to find great entries.
Yes. And to find great entries, find your risk first.
Yep.
Where does price have to go to prove me wrong? And then get as close to that as you can for your entry.
So Jim goes, I prefer negative risk to reward with extremely high 90% win rate. Now, Jim, I have not seen traders hold 90% win rate for very long. It's a hard win rate. This is what I've seen, to stay that high for your career. It's just kind of a hard thing to have 90% of the time that you put on a position, it's going to be correct. It's just a little bit.
You got to be realistic with your trade expectations. Obviously, you saw that 5-to-1. I mean, how often are you hitting a 5-to-1 trade? That's such a tight stop for such a big, profit target. I mean, it's just not realistic. I mean, obviously, we'd all like to have those home runs, but that's 20% I think is unrealistic, really. Yeah. But yeah, that was good stuff. That just shows you how you, like Johnny says, keep the math on your side. If you do, you'll never go broke, and you'll be in this game for a long time.
So I'm back in this short now.
I saw that.
And the reason being is we're actually building some volume below the previous range.
Yeah, I see what you see.
Right. So this low volume node here, I'm viewing that as, I want that to remain resistant. I'm looking for the market to continue, leave a couple of single TPOs up here and continue lower. If it doesn't, I'm fine with it. If it does, then, I'm sorry, here. I'm not showing the thing. So we're starting to show a little bit of volume in here. There's a low volume node at the low of the previous day's range. The previous range low of the day, the initial balance low. So we're starting to show a little time, starting to build a little bit of volume down here. I mean, it's really not a good time to be entering a trade like this. Prefer to do this later on in the session when the market is compressed a little bit, but it looked like it was all right. We're right back to the low volume node. We've moved the point of control lower. We just got stopped out again on that, and I'm okay with that because the range extensions do fail quite a bit. But I'm going to be looking for opportunities, I think, to continue to look for shorts today. And, we'll see what happens by the end of the day. It was a calculated risk. There was a reason for it.
Yep.
And it just didn't work this time. So we'll look for the next one.
But the risk was manageable. So, I mean, you still got more bullets in the chamber, so to speak.
Yeah.
I mean, that's the name of this game.
Speaking of game, Andre, see what I'm wearing?
I did see that. Jeremy Lin?
Linsanity.
That was a great time, man. That was a wild time.
Yeah.
We went to we had a trader meetup. We had a trader meetup group. And we go, hey, we're going to open up a tab at Bleecker Street, some bar on Bleecker Street. When we're in town at the some trading expo, man, this is in 2011, 12, something like that, right?
Yep.
Linsanity had just started. Jeremy Lin had just started becoming insane.
Yep.
And he went through this like really hot streak. And we got to go to the Knicks game. I mean, it was like row whatever, one away from the very, very top.
We were up there.
Yeah, at the Garden.
But the Garden was cool.
And then right after that, I think right after that or before that, we went to we had a trader meetup group.
Yep.
And we all had, if anybody that was at Topstep at that point, we said, hey, bar tab open, come hang out. We talk shop there. Talking shop. There you go.
Talking shop. I got to meet the infamous Nibot at that.
Yep.
Yeah.
Oh, yeah.
I remember her.
Yeah.
Theodora.
Yep.
I wonder where she is. I tried reaching out to try to contact her.
That would be cool. That'd be great.
Anybody know where Nibot is?
I remember they got in an argument one time because she was saying something about the markets, and Andre got in there, said something, and he's like, the market needs analysts too. And he goes that to her.
Stop. On that note,
Is that why she's not
it was just a
responding?
little banter. It's no different than at that moment in time that we were talking markets and yeah.
All right. Well, let's end it on a good note. Andre said we had peace.
yes, we did.
They went to dinner and they got married, but what?
No, we did. She did meet us up for dinner. Yeah, or
Yeah.
for
She was
drink.
great. She was great in person.
Yeah. It's just if you can't have a little bit of tension sometimes, and just like going back to that trading pit days, and then next thing you know, you're going out for lunch.
Love is in the air, my friends. Andre, I love you, man.
Love you guys.
With us here today, and you'll be with us tomorrow, right? End the week on a good note.
Talk to you later, Andre.
Man. All right, boys and girls. We've got shoulder tap on the shoulder coming up next. Time to share some success. Time to avoid some failure. Mick is in the wings. We'll be right back.
Hello there, Mick.
Greetings, Mick.
Morning, fellas.
How you
What's
doing?
up, Mick?
Hey, I'm good. How are you guys doing?
Good. I'm doing great. And I'm gonna be paying or listening, but I gotta cut out. But I wanted to say goodbye. But I also want to say, guys, tune in because I think Mick is going to talk about some of the traders we talked about today that were in the live. But Mick, risk manager, Mick, down 850 on the day.
That's all right. It's all right.
That's all
Dan's
right.
got you covered, up 1,000 trading the oil.
Yeah, 3,200 minus 800, whatever that number is what I'm up for the week. Yesterday was a scratch day. Today's an 850 down day. Monday was a 2,000, and Tuesday was a 1,200 up. So we still have tomorrow, but I'm going to keep the money in my pocket because Mick calls people and he helps them do just that. So I'll let you guys take it from here. Appreciate being on with you guys today. I have a meeting here in about 15 or about 25 minutes that I have to be on. So good stuff. I'm out. You guys have a great day. Mick,
thanks, Michael.
Take it away from here.
All right. See you, Michael.
See you,
Michael, bro. Bye-bye.
Now, as he's leaving, I just want to say all traders should be keeping track of where they're at on the week with their P&L wise. You do want to have a good idea of that. If you're up money, it gives you a good idea of what you should protect. So come the end of the week, worst case scenario, I want to be up X amount of the profits that I'm up, currently. And if you're having a bad week, you should have a pretty good idea of how bad it is, to the point where you could say, got to scale back my size, should only risk this much more. Maybe I should take the rest of the week off, go do something nice for myself, or spend Thursday and Friday doing homework on what happened this week, kind of thing.
I like it.
Yes.
I mean, you have to.
Yeah,
I mean, there's just so much stress and built up anxiety, and I mean, you've got to separate. There's got to be a differential here where you can go off and not even think about trading. I know that's hard for a lot of us, but it's a necessity. You need to have that separation.
Yeah, and there can be stress and there can be anxiety. That's gonna pop up, but there's so many things that you can do to avoid that. First and foremost, if you're framing out a trade before you put the trade on, you know where you're getting out. If you're wrong, know where you're getting out if you're right. That removes emotion from the scenario. And if you already have those things predetermined, if it turns out to be a losing trade, you already mentally prepared for that negative outcome. It's gonna be less stressful. You're not gonna have the anxiety. It's where you don't have a plan and something goes sideways on you that you get anxious, you get stressed, you freeze up, deer in the headlights, you say, you don't know where to get out, and then you panic. And I've been there before, down 2,000 on a trade, didn't have a plan on where I needed to get out, and it's like, oh shoot, I hope it just goes back to break even for me. Oh shoot, I hope it turns around. And then you're down another 2,000 on the trade, and you kind of freeze up and eventually have to puke, and then you feel awful for the rest of the day.
So Mick, I think I'm about even for the week, but I've been having a very difficult time even taking my foot off first base. And I think part of that issue is the fact that I'm now trading in front of God and everybody. I'm really trying to get my head wrapped around that idea and really not care about the performance, because when I start worrying about performance, the performance goes down.
Oh yeah, it definitely does. Well, we can talk about that, Hoag. I know you don't need it. I know you've got it covered. But you're a low risk trader. You are. You know what you're doing. You've been doing it for a long time. I can understand doing this in front of however many people we have on viewing is a different story, and you want to show good stuff. But you got the special sauce, man. You've got the risk management.
It's like being a magician. It's like there is. It's either you do it right or you fail. You do it right or you fail. Yeah, you got to give those guys credit, because sometimes the trick doesn't work, and you're done. You're done. You might as well walk off the stage.
Yeah, you just have to make sure that when you're done or you fail, it's a small one that doesn't jeopardize you, taking the next trade, kind of thing.
Right.
Money management.
Well, and it's, you said it, when you know what your risk is, you can accept it already. It doesn't hurt as much, but it just trying to find the right trades. I've been in a couple of really good ones, and just kind of numbers are coming out, that kind of shit. So you just got to do what you do. Yeah. And I'm getting my head wrapped around it. It's a different decision-making process that I'm just kind of getting my head wrapped around.
Yeah. And, to that, John, you've got a consistent approach. So as long as you have a good, consistent approach, it'll all smooth out in the end.
Yeah. One thing too is, we tell ourselves we got to follow along. We got to do what we want or what we've planned. And it's about committing. I mean, you talk to a lot of traders here at Topstep, and they'll say, yes, I'm committed. And then 2 days later, you see something that's been recklessly done.
I hear that.
And it's
all the
like
time.
You've got to, even if you put a little Post-it note on your monitor, commit to my rules, commit to my game plan. That's what honestly, that's where I see a lot of failure.
Commitment is something, and people greatly underestimate the amount of discipline you need to have in this industry. People know what they should and shouldn't do, and then they make exceptions, and then they do what they know they shouldn't do. And if you do that just once, you can't say you have the discipline. So it's probably the hardest thing, but people greatly underestimate that. I cannot tell you guys, and John, I know you know this, I cannot tell you how many times over the years I speak to a trader in their live account about not doing X, Y, or Z.
Mm-hmm.
They are fully bought in, totally agree, say it's a great idea. The very next trading session, they go and do it.
I know, I've been in that seat.
Yeah, that's why I said I know you know. And I know I vented to you about that.
I know that you know that I know. But speaking of knowing, let's hit that first card. Let's see what's going on here in the world of risk management.
Yeah, let's talk about Sean C. Ding ding.
Ding ding.
There we go.
Island Park. I wonder if the Island boys are from there.
Island Park, New York. So these stats for Sean. Sean got transferred from his Express funded account to a live account yesterday. So he's going to be starting trading in his live account in the coming days. These stats are from the XFA that we moved him from. So really good stuff here. Average daily P&L, $3,200. Average winning days, $8,600. Really, really good stuff. He, as a matter of fact, I think he was brought up in one of the earlier segments because I saw on the messenger that someone was asking about Sean. Sean's up 52.
Sean.
Excuse me?
This is the same Sean. He's up $5,000 today.
Same Sean. So actually, this wasn't a transfer. I misspoke. Wasn't a transfer from yesterday. It was a transfer from last week. Today's his third day in his live account. He's up $5,200. He made a really good chunk of money in his XFA. He got off to a rocky start. So what I want to talk about him because he's traded very well. He's up well today. But I wanted to talk about his first two trading days. He started with about 22 grand in his live account 3 days ago. His first 2 days in the live account were big losing days. Daily loss limit, the $3,000 daily loss limit. And I bring this up, I want to highlight his good trading, which we just kind of talked about. It speaks for itself there. But I also want to highlight what happens when some of these traders transition from the simulated markets and the express funded account to the live markets. Mm-hmm. A lot of them come out of the gates swinging hard. And they fall hard in those first few days. Like I mentioned, down 3,000, down 3,000 on day one and day two. Something to keep in mind. There is a psychological difference trading live versus trading sim. So my best advice to all these traders that are getting called up from sim to live is start small. There's nothing wrong with trading 1-3 contracts at a time early on, despite your ability to trade larger size. Put your foot in the water before you go diving in head first. Right. See if that water's too cold, too hot.
Yeah, it's like I call it the sacrificial lamb. Put that one lot out there. Give it a try.
Yeah.
Use your practice account.
But we are in the business of protecting our money, not making our dollars sacrificial lambs.
Mm-hmm.
Well, that's what I said about the practice account. So use the practice account.
Practice account. But it's just practice account. You're in sim again, Eddie. You're totally right. Use the practice account. But these traders, I know they want to trade the markets. Just start off a little small. Get used to it. Because you don't want to be losing $6,000 on a $22,000 account after 2 trading days. It's a big percentage of your account balance.
All right, who else we got? Thank you, Sean C. Mick
Kiyoshi.
He used to be the trainer for the Cubs, Kiyoshi.
So
I think he might
Kiyoshi's
still
W
be.
from Texas.
Wow. Okay.
Kiyoshi's in an express funded account, and the stats that we have on Kiyoshi's trading card here double him because he's trading in 2 XFAs. He's using a trade copier, so everything you see here is doubled. That average daily P&L, that's just from one of his XFAs. So technically, he's averaging $1,300 a day, and he's got 92% winning trades across both of those accounts. Trading ES and NQ. What I'd like to see from him, because he's wildly profitable, take some more payouts. He had a little $300 payout, which is awesome. You don't need to take massive payouts, but he's been in the accounts for a while. He's been trading really well, putting up big days. I'd love to see him take a little bit, another payout or a little bit of a larger payout. Put that money in his pocket.
Very nice.
And John, Eddie, I know I've mentioned it, but I'd love for the viewers to hear it from you guys, talking about the importance of regularly paying yourself, taking that money, putting it in your pocket, the separation between looking at a number on the computer screen versus, a fold of cash in your pocket kind of thing.
Well, if I could start, it's good. A lot of traders, take their families on vacations, upgrade the house, do something in the yard, something that, and the thing is, when you look at it, you're like, I remember doing that from trading. Everything that I've sort of bought from my years in this business, I've remembered that, hey, that got me this. This took us there. And, that's why, I think that's why most of us who have been in the business long enough are still in the business.
Yeah, the money in your account is nice. It looks good. But if you don't pay yourself, does it seem real? I think that there was a number of different ways that traders on the floor used to kind of manage their accounts. You're managing your trades, you're managing your account, you're managing your investments. And if you let your account swell too much, your head swells, your risk increases, and you're going to take bigger risks and you're going to get whacked one of these times. And hopefully, God forbid that happens, but it's happened to me. I know it's happened to Eddie. I know it's happened to Mick. So you got to find that happy medium where there's enough money in your account to withstand a bit of a drawdown, but you also want to make sure that it is real. You've got to pay yourself to make it feel real. And whether you're using it to pay your cable bill or buy a classic car, either way, it's real.
Yeah. Yeah, it's good to have a maintenance level, and hopefully over time and profitable trading, your maintenance level, the account balance you always want to maintain to have margin to put up, weather any drawdowns. That maintenance level, you want it to go a little bit higher, especially as you start trading bigger and whatnot. Right. But keeping that money in your account and not paying yourself, you kind of make a separation between it being real money and it just being a number on the computer screen. And then, like John said, you're much more inclined to, risk more if you see, if you can say to yourself, oh, it's, it's only X percent of, a much larger number. So always be paying yourself. Kiyoshi, can't wait to continue seeing what you're doing.
What else we got,
metrics.
Number 3.
Number 3, Charles English. Now, this is someone that we called up to a live account yesterday. Baton Rouge, Louisiana. Charles has been trading very well. I want to highlight here 44% winning days, but there's an average P&L per day of almost $900. This comes because he's a home run swinger. He either has a big winning day or a big losing day, but those big winning days have prevailed. And I think what kind of really plays into that average daily P&L is 2 days in particular. He has put up a $16,000 winning day, and a $14,000 winning day in that express funded.
Wow. Very nice.
Yeah. So that always helps.
Baton Rouge, Louisiana.
Yeah,
guarantee.
For Charles, I think, working on limiting his losses, every losing day, not every losing day, but the majority of those losing days, he goes right to that $3,000 daily loss limit. Just because it's there doesn't mean you need to risk it. We put those, we put those out of bound lines on there for the traders, but traders should really be thinking about what their own personal loss limit is. However, when you are trading large size and you are looking for, big moves, being down 3,000 can come pretty quickly when you've got, 10, 15 contracts on kind of thing.
Well, it's nice that he's able to put up, $10,000, $15,000 in a day. It makes losing $3,000 a little bit more reasonable. If he's only making $1,500 a day and losing $3,000, that's another story.
Backwards, yes. We wouldn't have a trading card for Charles if that were the case.
See, we're all different. We're all different. I'm happy with a $300 day. Me too. It's you too. We're all different here. But anyway, we're running out of time, almost close to top of the hour. Mick, any closing comments here, my brother?
Yeah, with this being the shoulder tap segment, I do have a shoulder tap. This is not a featured trading card for a trader, but I do have someone who got the tap on the shoulder today, Saad, who's trading in a live account. They've kind of been, bleeding out their account balance recently, and they came into today with a $4,200 account balance, lost $3,000 on the day. It's a massive percentage of what they had left. If you've got $4,200 in your account, you should be thinking about risking no more than $400 in a day. That gives you enough wiggle room trading your one contract. You got to dig out of the situation that you put yourself in, and risking 75% of your trading account roughly is not the way to do that. So that's my tap on the shoulder for Saad. For those of you watching, hopefully a learning experience that you don't need to replicate yourself if you're aware of it.
All right, good lesson. All right, Mick, appreciate the time, my friend, and hopefully we'll have you back here tomorrow. Sounds good?
Thanks for having me. Sounds good. Take care, guys.
Mick.
On this day, check this out. 26 years ago, Amazon.com Inc. Amazon went public. $18 per share. 26 years ago. That same day, the Dow finished the day at 7,286.16. The S&P traded 836.
Yeah, that's another trade I missed.
I missed them all. But hey, we've got Top Quiz. And yes, ladies and gentlemen, Alyssa is going to be joining Jack. Alyssa, you got a big fan club, and she does so good too. She does very well. But we're going to be doing this. If you want to join, Jack's going to be giving away, what is it? A trip to Romania? Are we doing that?
Yeah, that's all. We give one trip to Romania, one to Bulgaria, and one
to Transylvania.
Okay. Sorry, we're just offloading a bunch of tickets to Eastern Europe we got somehow. No, it'll be 150K, 100K, and 50K combine. And then we will draw a couple of random participants during group coaching. We're doing a speed round today because once again, we ran a little bit long.
Ah, man, time. When you're having fun, time flies.
But, Dylan, the funded trader Dylan, has been nice enough to join us, so I don't want to keep him waiting too long.
Right.
So I'm going to leave this screen up here, throw on the smooth jazz, and we will see in a bit. You can sign off, Eddie.
I will.
Thank
I'll be
you.
back, though, I promise.
Great hanging out with everybody today. And Eddie, good to hang out.
All right, brother. You got it, man. Nice seeing you, Johnny. See you tomorrow.
See you later.
Bye.
Hey, everybody, a little bit behind the scenes. I got to restart this system we're using. So you'll see the blank screen in the background for 30 seconds. See you in a few here. All right. Second. What a day. Okay, we're live. Hello, everybody. We're back for another top quiz. 7 questions today. I'm joined by Alyssa. Alyssa, what's happened?
Hey, Jack. It's a gorgeous day outside. How are you?
I wouldn't know that. I've been in this room the whole time. Boy, you guys might have got a little hot mic action behind there for a few seconds there. And it's just been a day behind the production box. I think I just said, oh boy, what a day. Anyway, don't let that rain your parade, Alyssa. It's top quiz. 7 questions today. Answer them right. Answer them fast. There's an 8-second delay, so look at your device. Don't wait for us to talk about them. I think I put a 10-second limit on the questions today. Cool? Ready to go?
I'm ready, Jack. Let's go.
Funded Trader Dylan is in the waiting room. I don't have time to read too many names as they're coming at the end. Wayne, oh my God, wrecked him with a 3. That's terrifying. R3K Tom. Oh man, that's up there with something. Jack, that's me. I rock. Drew. Okay, let's get this started. Andres 2, you will be the... Okay, I'm doing what I said I wouldn't. Let's start.
All right, let's do it.
All right. Top quiz. Question number 1. What television show has won the most primetime Emmys? Is it Game of Thrones, Saturday Night Live, The Simpsons, or Breaking Bad?
Oh, doesn't it have to be Saturday Night Live?
It indeed does have to be Saturday Night Live. But,
Exactly.
you know, The Simpsons is a popular one, too. I think Saturday Night Live has like 304 nominations and 80-something wins. The Simpsons, I believe, are second. All right. Who's still watching Saturday Night Live? My in-laws do. I don't really know too many people besides that. All right. Alyssa, you're 1 for 1. Question 2. This is the largest commercial airplane in the world by passenger capacity. Is it the 747, the A380, the Tupolev, or the 777?
Jack, I hate flying and I'm scared of it, but I do it all the time. It's the Airbus.
2 for 2. Airbus was enough there. There's not a lot of time, because we're talking through this, and I put the 10 seconds. It is the Airbus. If configured completely for economy, it can hold 853 people, which sounds like hell. Just nearly 1,000 people in economy.
That is a no from me, but oh well.
Oh well.
Oh well.
Checking the YouTube chat here. Oh, fun stat. Not a stat, just a fact. The next couple questions, so much stuff was going around behind the scenes today. I had James Harden step in and do some questions. So let's see how we like those.
All right,
you ready?
James.
Question 3. Which country drinks the most coffee? Sweden, Greece, US, Finland.
The Sweden, Finland.
Which?
Finland.
It was Finland.
I changed it at the last second. That still counts.
Well, I took this to mean per capita, and James, we have to work on it. If they're saying probably gross coffee, then it probably is the United States. But this is per capita. Sorry, the quiz is never perfect.
It's perfect because I got it right. So thank you, James.
Well, it's also, if you thought it was just by the most coffee, they wouldn't have picked Sweden, Greece, and Finland, which are tiny countries. It would have been Brazil or something like that.
Exactly.
Okay. Next, we got Blue Stripe, Cal's My, DC, Nash. We got new people here. Love it. Next question. What company was initially known as Blue Ribbon Sports? Nike, Adidas, Wilson, or Fila?
Was it Fila?
It was Nike. Oh my goodness, though. You're 3 for 4 right now. This is going to be a new Topstep record, I think.
Yeah.
Well, I don't want to jinx you now. Don't want to jinx you now.
Yeah, we'll see. We'll see how it goes.
All right. DC. Braid Trader. Okay, next questions. What is the highest rated film on IMDb as of January 1st, 2023? The Godfather, Shawshank, Schindler's List, or The Dark Knight?
It has to be The Dark Knight.
It is The Shawshank Redemption.
Yes.
and listen, that's a very good movie, but it's sort of like the fickleness of the masses. People just, I think no one hates that movie, right? So it does very well in the IMDb ranks, and it's always on TNT if you need it. Lego DC. All right, here. A lot of people think The Dark Knight with you. Let's see. 2 questions. How many bones do we have in a ear? A ear. An ear. An ear. James.
Do you have any? Is there one?
Well, you would think the right answer would be there. It is 3, and it seems like the crowd kind of knew that.
Whoa. Okay. Got some ear people in here.
Okay, those were all of James' questions. Checking the stats here, and then I have one more, which we'll see if you like it or not. I nearly did like what percent is MP's mortgage, but I couldn't remember the decimals. Lego, Andrew, let's do it. Last one. Which trader on TopstepTV loves to use bracket orders? Is it Andre, Dan, MP, or Hoag?
I remember them talking about this. It's Hoag.
No. It's Michael Patak.
Michael Patak. Him and his sticky notes and his bracket orders.
Yeah. Odd guy. No, I could say that. MP's great. We work together a lot. Yeah, he likes the bracket orders. And let's see who got the podium in 3rd place. Lego.
Nice.
In 2nd place. This is what I can't tell if I can say. I don't want to say it. Andrew. There, I can say Andrew. I can't tell if I'm big. This could be a name, the silver medal somewhere. But
right now.
It'll sound weird out of my mouth. Anyway, bro, we were 6. Lego's good. All right. Thanks for playing. We're going to get things set up right now to bring in Dylan for our Funded Trader interview. Alyssa, as always, amazing that you're here. And thank you for playing, putting yourself out there.
Thank you for having me, Jack. It's always fun.
All right. Give me 2 seconds here to put up a little... Let's do the coffee break. We'll be right back.
Hello and welcome back. Welcome back here. We've got our good friend and Topstep funded trader Dylan with us, and he's going to be our power player today. And Dylan, how are you today?
I'm doing good. I had a great trading day this morning, so started off the day nice.
You did you now? Tell us about it.
Yeah. I took crude longs. I just had one of my setups. I call it a trend up day. So I just bought at my signal and rode price up to just about 91.
Beautiful. I think it was a tough trade there, though, but ride that crude. I tell you, nice recovery there in the crude. So you dominated. You took advantage of it, made the trade, and had a great day. Nice. Very nice. Dylan, do us a favor. Tell us about yourself, so we get to know you a little bit better.
Well, as far as trading goes, I just trade crude, and I only take long setups on it. So I've been trading with you guys for a little over a year now. I think it's a year and a couple months at Topstep. And yeah, this last month and a half have just been great with you guys.
Awesome.
I came from
Go ahead.
I came from trading options first. I traded like XLE and ZOM, and I'd always watch the crude chart. So then I heard about you guys, and I was like, I guess I should come over and trade futures instead.
And you've made a nice home here, and you're doing very well. So very nice to have you, too. And before I go any further, just going to give you props for saying, hey, you know what? I'll come on Topstep TV. I'll share my journey with you. So cool stuff, and we appreciate that, man, a lot. Now, let me ask you, Dylan, who or what got you interested in trading?
So during COVID, I moved out to LA to do some video work, actually. And I just met some kid who was trading, and that's kind of how it got me into it. So like 2020, I was first introduced to trading, and then I just fell in love with it from there.
Really? Okay. So you're fairly new to the business, and
yeah, pretty new.
You know, that's one thing. It's one thing with new traders is I know a lot of old traders like Hogan, myself, and Michael. I mean, we had bad habits that we sort of brought to electronic trading, and then we had to correct those. We had to fix those. We had to eliminate those. But coming into trading new, you don't really have too many bad habits. And then, of course, obviously, as we grow, we do develop bad habits. But I mean, it's something good. It's really neat to hear that this is something new. You got hooked, and you're moving forward very well.
Yeah, I had my little span of bad habits. I was resetting accounts for a while. I actually got kind of lucky when I first started trading with Topstep. It was when crude was going to like $130 a barrel, so everything was just going straight up. I think I got a payout in the first like month, and then reality kind of set in. I was like, okay, that was kind of a little bit of like a luck streak there. I need to actually figure out what I'm doing. Yeah,
Right.
just learn way more.
You took advantage of those resets, huh?
Yeah,
Manny? Well,
that's for sure.
A lot. A lot. The thing is, too, I know that when we see, and this is the honest to God's truth, when we would see somebody that were utilizing the resets, you know, I know for myself that I would contact them and say, hey, this has got to stop. You know, you're just spinning your wheels. You're not getting any gription. You're not moving forward. And it's a crutch. And I think you realize that, too, that, you know what, I cannot make this mistake anymore. I cannot do this anymore. And I think that's when you got some traction and you really started to move forward really nicely. Now, Dylan, can you walk me through your typical trading day?
My typical trading day, I try not to overanalyze anything, just to not think too much into it. I like to just like take a first look at the charts at about 7:30, 8 in the morning Eastern time. And then if I see a good bullish setup on crude, I don't really hesitate to get in. I have two main trades that I'll take. It's a trend up day, which is basically what we saw today, or just a bottom reversal. So I'll take that a lot too.
Okay. All right. How do you manage risk in your trades?
I don't trade very big compared to like the lot size I'm allowed to. I trade usually like 3 to 4 lots, nothing much more. So I try to just start off trading smaller, and I try to hold for about $1 move on crude.
How about strategies? Do you have any trading strategies that you can share with us?
Yeah, I use the VWAP bands. I use the VWAP with the upper and lower bands, actually 2 lower bands. I use that one a lot for the reversals, and then that upper band is how I watch for a trend up there. Okay. And I treat those just as like a level. I use those with just a simple chart as well. So I have one chart that's just all levels, just pure price action, and then the rest are with the VWAP.
Okay. Now, everybody that's listening, of course, even myself, everyone's looking to continue to grow. Now, what are you hoping to continue to work on the most right now?
I think it's just consistency right now. And I think that all comes down to psychology. So I've been working actually with Isaac. He was on Monday. I got into his inner circle program, and that helped me out a lot with all my psychology.
That's it. I mean, a lot of, and I firmly believe it all starts upstairs. Before you turn anything on, you gotta have that checklist. You gotta check. Am I focusing today? Do I feel good today? Am I foggy? I mean, that takes a lot. A lot of people don't realize, but that is a big part of having a good day, whether you're trading good or bad, but realizing and seeing the market correctly. You got to be in the right frame of mind, the mindset, positive mental attitude.
Yeah, definitely got to make sure you just stay in that spot. Otherwise, what I would do a lot is just fall into like a self-sabotaging spiral.
Yep.
Yeah, and that's just what causes you to reset. So that you just have to catch yourself before you fall into that. And
well, I've talked to thousands of traders, and that was the problem. They would dig a hole, and then they would say, okay, one more trade, I'm going to get out of it, one more trade, and the hole would get deeper and deeper and deeper, and then the panic would come in. That would be something that would sort of hijack the account, the emotions, and so forth. That would happen. We've got some questions here in our YouTube channel. Let's see here. We got, let me see here. I thought we had some. But let's do this here. I'll give you another question here regarding that. What advice would you give someone who is new to trading?
Definitely to take it slow and find someone to help you out in the journey. Just to not rush it, not try and for the profits at the start, but to just actually learn the skill of trading.
Okay. JT's asking, how do your stops look? He's curious.
I usually have 10 to 25 cent stop losses on crude.
Okay. All right. Short and sweet.
Yeah. Depending on the levels I have, somewhere between 10 and 25 cents.
Okay. Now, have you ever experienced a significant loss in trading, and what did you learn from that?
I don't know if I have any losses that truly stand out to me. I mean, I've had a bunch of days where I just completely let everything go on these combines, and I'll just take $1,000 loss, $1,500, and then I'm at the $3,000 loss limit before that. But that was like the self-sabotaging kind of trading I was talking about. So I've really tried to stop that and just not let myself hit that $3,000 limit, but sometimes it still happens. Usually try not to, though.
Okay. Do you watch the news? Do you trade the news?
A little bit. I'll watch for like OPEC stuff and Russia news, just anything regarding crude. Some of the interest rates too.
Okay. All right. How about your entries and your exits? I know that you mentioned that you don't really sort of focus too much. You want to get into the market early enough. How do you determine when to get into the markets and when to exit the markets?
So for the reversal trade, it's really just I have to force myself to wait for some kind of confirmation that price is reversing, whether that's a lot of volume, like on a big red candle and we fill the lows, and then I have a confirmation coming back up and I just wait for that confirmation. I was actually explaining it to someone the other day. I don't expect to catch the bottom, but I expect to enter on my confirmation. So once I have that confirmation, then even if it is a loss, it's a valid loss.
Okay. All right. What's your, Danny Means is asking, what's your average hold time?
I think it's somewhere around an hour. Sometimes it's like 30 minutes. Sometimes it's an hour. Sometimes it's an hour and a half. So I think on average, it's about an hour.
All right. Darth is sort of asking, how do you hold for the full dollar on crude? Darth is loves crude, but needs to work on the R.
So on my chart with VWAP, I have every dollar marked out as a level, and then I have every 50 cent marked out as like a dash level. So it's a little bit less important, but I just use those as my guide. Because I'll go look back a lot of times, and I'll just see that like that's usually the average move. So whenever we have a good upside move, a lot of times it goes about $1. Sometimes it goes a little bit more. But if you take that dollar profit, it's just, you don't get too greedy and it keeps it consistent.
Greed, baby. Greed. That's the killer. That's the killer. Yeah. I learned that long ago. You can't have that anywhere in your equation. No. So it's good that you recognize that. All right. One more last question, and I'm going to ask you a fun question. Gotcha. Stewart's asking, best time of the day for trading crude?
I think that 8 a.m. to 9. 8 a.m. to 9 a.m. for the entry. And then if it doesn't work out between then, I like to space it out between 10:30 and 11:30. So it kind of slows me down after. I have like the aggressive entry zone from 8 to 9. And then if those don't work, I just take a little step back and I come back at 10:30 or 11:30 for the European market close. And that's where I'll start looking again.
Okay, cool. Dylan, I appreciate you being here with us and continue your success. Keep moving forward, even if it's small steps. You're still moving forward, and I think that you've locked that in pretty good. And I hope to see a lot more positive from you. But last question. This is the fun question. All right. You went to the corner gas station, and you said, "Oh, what the hell? Give me a lottery ticket." So you got the lottery ticket, you scratch it off, and you won $1 million. Congratulations, Dylan. What are you going to do with that $1 million?
If I were to, I'd probably just put it into something that'll keep on making me money. Some real estate, possibly like an Airbnb or something like that. Just something to bring in some cash flow, just so it doesn't all disappear in the next couple of years.
There you go. All right, Airbnb. You're an entrepreneur like Mr. Patak. Very good. Yeah. Well, Danny says he'd pay off his parents' house. All right, Danny. You're a good boy, Danny. But hey, you know what, Dylan? Appreciate the time you spent with us. If you need anything, hey, we're here for you. You stepped up to the plate for us, and make sure let's keep contact. And all the best to you in the future, my friend.
For sure, will do.
All right. Peace out.
All right. Thank you.
And we'll catch you again. So until we meet again, I'm Eddie Horn. Stay focused, stay positive, trade well, and take care. Oh. All right. All right. Now it's time to sort of kick back a little bit for Coach's call. I got my friend Robert here. Hello, Robert.
Oh, yeah. Howdy, howdy. Great show this morning. A lot of action in the market the last few days.
You know what? It's been fun. It's, like they say, if your job is fun, it's not really a job.
100%.
I'm having a blast with these guys. And of course, the traders.
The traders community has been awesome. They're really super active. Lots of good questions.
Yeah.
Awesome. Love it.
Yeah, and if you like what's going on, hit that like button. We forgot to do that today. I was sort of in limbo for a while there, and I didn't know what was going on. You guys couldn't hear me, but I don't know. I just kicking and punching some of the equipment, and eventually it said, "Okay, we'll put you back on." So it was my mistake. I don't know. Oops. We went silent, but we're back.
Tech gremlins.
Those gremlins. And I hooked up with Robert, and the thing is, when I get with Robert, it's like, okay, we're like, what topic you want to talk about? And he jumped in and he said technicals and fundamentals, and I'm like, you know what, we haven't hit that in a while.
Yeah.
Regarding that. So I pulled out some of my notes, and Robert's more going to hopefully lead this conversation because he is the professor when it comes to technicals, so forth, and fundamentals. So, Robert, if you want to fire it up now, just a reminder, technical trading and fundamental trading are two different, distinct approaches to the financial market. You might hear somebody say, I use technical trading, I use fundamental trading. That's what we're going to do. We're going to try to break it down. Now, each has its own philosophy and methods. So, Robert, what do we got for our wonderful traders that are listening and watching?
Yeah, there is a crossover there too. I'm glad you said that. They are definitely a very distinct and different, separated approach to the market. Neither's right or wrong, and they're both right and wrong, right? Depends on who you are, depends on the instrument, time of day, all that type of stuff. But there is a crossover. I'm like a 90% technical trader. Okay, technical means that we're just going to look at the chart and read the price action, maybe use an indicator or two that's going to give you possibly give you an idea at where the market may or may not go, right? It's all speculation and probabilities. With the chart we have up here is the NQ 30-minute chart. Hoag likes it. A couple little indicators on there, meaning moving averages. He's got the volume profile, opening range, and a couple levels on there. That's the technical side of things. It means it doesn't matter what happened in the news. It doesn't matter about what report came out, how earnings were, or what the stocks are doing. He's purely looking at, well, are we above or below the opening range? That's a really good technical area. Now, the fundamental side would be more along the lines of something that like Dan does when he's trading oil. He's going to look at, hey, when's that OPEC report coming out? When's the summit meeting about, the Saudi oil things? What are we doing for barrel? And then he's going to say, oh, I just heard about this, read about this in the news, listen to this comment. And you know what? That might drive the price of oil down. So I might want to short this. Yet go over and look at his chart and maybe put a technical indicator on or two with that little bit of one side versus the other and a little bit of crossover in the middle. So that's the fundamental difference. It's a difference between both of those.
Right. And some people call it technical analysis. Like you said, it's based on the belief of past price movements and trading volume.
Right.
So it's going to provide insight to a technical trader. And then the fundamental trading is based on the evaluation of an asset in the value by analyzing the various factors that can affect its price, like you said. Watching news, following what's going on in Saudi Arabia. So those are the basis versus each other. Now, let me ask you, Rob, I sort of like to do both. Can I do both?
You can absolutely do both. And I'm going to say that it's rare. No, it's very rare that you have a trader split in exact middle. Okay. It's usually lopsided to one way or the other, 60, 70% technical, but watching fundamentals, 60, 70% fundamental, but keep an eye on the technicals too. I don't know of anybody, where it's split in the middle or that it's 100%. I am a very strong sided technical analysis trader, but the things that I tend to focus on the fundamental side is like, I don't need to really care about the news or what happened in the news, but just that there was news. For example, FOMC yesterday, it's like, yeah, you could be a really good technical trader and just be like, my answer to trading FOMC is to not trade because we know that's a position, right? Long, short, and none. So yeah, you can have a very strong technical, but you still need to pay attention to fundamentals. And the other side as well, you could be super fundamental and be like trading the oil, right? That's a really strong market that's driven by what is going on in the Middle East, what is going on with our economy. There's a strong portion. If you're trading oil, crude oil, or natural gas, you better be looking at fundamentals. If some of the others too, if you're trading the grains and the soybeans, you're trading the hogs and cattle and some of the metals, you really need to look at the fundamental side. You're probably biased on fundamentals and then be like, this is really good news. Things have been pushing. And then you look at the technical side of the fundamentals and you're like, but you know what? We're 7 days straight up and we have no pullbacks coming on. I'm going to be cautious going long here, even though the fundamentals are pointing that way.
Right. Trading crude can sort of put you in the middle there. I know there's a lot of information. I find more information on crude than we do on the ES than we do on the NASDAQ. But if you're following stocks, you get a good idea of what direction those markets can go. But crude, we've got this EIA and API and WTF, and we've got what's coming off of Saudi Arabia. What did they do now? OPEC and so forth, and then of course Exxon. What did Exxon just come out to say? So there's a lot of things that sort of you could bounce your trades off of, but what really is hard is what you follow and what you can honestly I'm going to say trust. That's a point where I think crude traders, we do have gold, we do trade gold too, and of course there's many ways you can sort of look at trading gold, but I think crude is one of those markets that has a lot of information either way, technical and fundamental.
It is, and you touched on something. If you're trading crude, you're only trading crude. The one thing you're looking at is crude. All the news is around crude. If you're trading NQ, I'm just using NQ because we have it in the chart right here. It's the NASDAQ, the top 100 stocks of the NASDAQ, but we know that the top 6 or 7 move that thing around. So if you're trading crude, it's crude. It's always crude. It's only crude, right? If you are trading NQ, you got to follow the top 10 stocks. And what is Apple doing? What is Microsoft doing? What is Google doing? What is Netflix doing? What is Amazon doing? And all that stuff, it's just bouncing off itself, right? You can have a few of them going sky high, and then the other 90 stocks dropping like crazy. Market's still going to go up. It's just that it's a very, very strong pull. So you do have to follow those ones if you're a fundamental trader or using fundamental analysis in your technical analysis, and take a look at those also. And with these charts here, TradingView, you have a second one up there and put those 5, 6, 7 stocks on and see how they're doing, see how they're all pointing and moving along, and maybe use that as a justification for taking a position in NQ or ES. All the indices like that, the S&P 500, top 500 stock, just a thicker market. RTY, the Russell 2000, is the top 2,000 small cap stocks, right? So Dow, the industrial average, all kinds of stuff in there as well. There's 30, so that moves around quite a bit as well. But crude is crude is crude. Gold is gold is gold. Silver is silver is silver. Exactly. Cattle is cattle. Although, Coach Jack, I think he's gonna be on here pretty soon.
Yes.
He's a corn guy, and it's funny. He's like, so what do you think of corn? It's going sky high. It's like, nah, it's going to go down. It rained in Chicago yesterday. Like, what does that have to do? It's like, well, it's going to water the crops, and it's going to move on, and we're going to, if the prices drop now, we're going to get into that, because now that the crop's doing better, it's going to be higher price later on. Let's lock in lower. Besides, the cattle are doing better. They eat corn to feed off of. It's just a whole mix of things. It's a
domino effect.
They're good at that stuff. I can't do that, but it's just different person.
You know what they used to do? There was actually a weather futures that they had, and that was sort of relayed. That was in the green room. Weather futures. What are you talking about?
I know.
They would
water.
trade the weather. And even sometimes these guys would go out and take a look out the window. Hey, it's raining. Okay. I mean, that's it. But the psychological approach now. Tech trading, I mean, we see that more objective because it relies on math, which I hate, and statistical analysis of price data. And what it can do is it can remove emotions from trading decisions.
Exactly.
Maybe if you're an emotional trader, you might want to think technical.
Like me.
There you go. But the thing is, you got to follow through. All right. Yeah. Because emotions. I mean, I still, when I'm trading, I still get emotions, and emotions want to hijack my account. But the thing is, I can recognize them just from all the years, I've been in the business, that you could recognize that. And, one good thing too, is I'm always asking myself questions, why are you doing that? Why did you move your stop? Why did you enter here? Why did you? And there's always got to be a good answer. Now, if you're a fundamental trader and, we're talking psychology, analysis often involves subjective judgment. And you got to interpret what data you've got. And, this is about perception when you're talking about fundamental trading.
It is. I wasn't part of the pit days like you guys were, and I hear you talking a lot of times like, well, I'm not sure what I want to do with this, but you look over to another pit and you go, I see the whites of everybody's eyes, I'm shorting. That's your fundamental side of things, regardless of whatever it's telling you. That's hard to do these days. And me being an emotional person, I mean, I'm an Irishman and Aries and Type A and all that stuff. I like the technical side, like the math. We hear Hoag say that, even though he's a little fundamental, he says the math is still going to be on your side. I'm 100% agreement with that. I'm not this guy that says that the pricing is actually figured into the market every day.
Right.
I don't subscribe to that philosophy, but I do follow some things with the forms of measured moves. So I can say, well, if this happens over here as a technical side, the probabilities of that happening are 70%. I'm going to go with it. Whether it works out or not, that's just how it goes. Now, because I'm not fundamental, I still have to pay attention to that and be like, oh, wait a second, Powell's talking in a half an hour. I better hold on to that thought. So you do need to have both sides of it. And technical, yes, it totally takes the emotion out. Well, 90% takes the emotion out of it, because you still got, I had a couple trades on today during the broadcast, and I had a couple of sweaty palms going on there. So,
well, how'd they turn out?
We're 100% today, 100% win rate.
Good.
Yeah.
Darth.
Small trades, just to be clear. Yeah, just a small trades to be clear. You're only talking, I think one was 8 points, one was like 11, and one was 6.5, something like that.
Right. Darth Trader has a question. Emotions never go away. No, they're going to be with you in every aspect of life, and especially in trading. You're going to see some fluctuations like you've never seen before. I remember just, praying and hoping to the almighty trade god, please, market, come my way. And, you're in a panic, and all of a sudden the market comes your way, and you're as happy as a jaybird in a summer morning. But But dart traders asking, how do you weaponize them for your benefit? Now, weaponize.
How do you weaponize the emotions for your benefit?
I more or less try to eliminate the emotions, and I mean, at times I catch myself trading like a robot, and from what I learned off the trading floor, being on an order desk, where you're getting millions upon millions of dollars to trade, it's not yours, but you got to get it done right. That's your job. And of course, there's a little panic and everything, but you know, these were the bigger firms. You know, my Deutsche Bank, RBC, Bear Stearns. I mean, these were, you know, they just wanted to get stuff done at a certain level between, you know, 19 even and 18 even. You know, get them done, whatever. But you know, with emotions, I mean, you've got to leave them at the front door. All right. Once you feel that an emotion is entering your trade day, either you've got to cancel out, all right, get out of your trade or do something, step away, take a step back, and maybe take a walk around the block, all right, and just think of what brought you to that emotion. What were you doing? You know, David Scott says, even as a tech trader, you still have to manage your emotions. So, I mean, and it's good stuff.
Yeah, it is. How to weaponize it. That's a really good question. And I'm with you, Eddie. You got to try to keep the emotions at the door. Like I said, I'm an emotional person too, but I'm very, very short-lived. I'm a very spiky person. Like if I get a good trade, I'm like, yeah, awesome. I got it. Woo, all right. What's the next one? And if I get a bad one, I'm like, oh, dang it. Oh, I knew I shouldn't have. A minute later, what's the next one? So I'm okay. That's how I would weaponize it. My suggestion there would say that's one way to weaponize it. If you know you're that way and you're really confident on it, maybe use that to do a little bit of a size up or something. Say, I am super confident in this trade. My probabilities are there. I love the action on this. I've seen this work a million times, and get that emotion in there to be like, I'm just going to go a little heavier this time. Very possible. If you're hesitant, you go like, nah, I'm just going to take this one. So you could use that type of emotional element to your benefit. But as Eddie said, it's just really, in my opinion, also, they don't belong. I get those little reactions up and down, but the better you can do, it's all about emotion. That's what these are. Green and red candles is human emotion on the chart. That's all it is. Right. The better you can handle that and control it, yeah, I think that's the way to go for sure.
You know how we share in the morning winner streak? You know, we had somebody that was 13 days winning, 12 days.
Yeah.
11. I mean, that's something where I don't think emotions are really much of a factor. But the thing is, you got to remember, if you have a good day, and we're all going to have a good day. We're all going to have that. Oh my God, that I have a great day. That's going to happen. It'll come. Okay. But the thing is, what I used to tell traders when I was coaching is, you're coming back the next day. Okay. Don't be in a hurry to give it back. Don't do that casino thing where you win $200 on a slot machine, and you know you were betting 50 cents, but now you're betting $2 max bet on the next slot machine. All right. The thing is, you know, be frugal. Okay. And what I mean by that is make sure that the odds are in your favor more than they should be. Because the thing is, if I have a $1,200 day, I don't want to give any of that back. I've built some confidence. I'm in the market. I'm feeling good. And the last thing you want is an emotion to hijack that account. And that 1,200 you had yesterday is now down 2,000 today. I mean, that's a kick in the junk. You don't want that. You don't want that.
Yeah. Those stats.
Go ahead.
Grab Chris right after. I want to comment on that winning streak. I pulled those stats last night to prep for that, so I just want to comment on two of those real quick. We have the 13-day winner, and there were, I think, 2 12-day winning streaks. Those were entirely different ways of trading. One of those traders only took 2-3 trades a day, had a 12-day winning streak. The other trader took about 125 a day, 12-day winning streak. Yeah. So it's really it's how you trade. So the streak is there. It doesn't matter if one trader is taking 2 trades and they're $1,000 each, and one trader is taking 10 trades, 100 trades that are $20 each, and with the same result. So it just match it. Those winning streaks are really good, but it's also nice to see the stuff behind the scenes as to how it all works. And what's that question you got for Chris there?
Chris had a question here. Are there any books you guys recommend that helped you develop the strategy or understand the market more? I mean, there's a lot of books out there. I mean, Robert, what's your suggestion?
Yep, it's the one for me was the I didn't read it. It's an audiobook, but I've listened to it about 4 times now. It's Trading in the Zone. It was highly recommended, and it was just me as how to capitalize and how to control my emotions. And he does a great job at explaining, giving you examples. I will say that when I listen to it, there's a couple sections there that they are a little drawn out, but just stick through it. After the 4th time listening, I was able to do the like 1.5x speed on some of those sections, but it was really good. Mark Douglas, right? Is that Mark Douglas? Yeah. The Trading in the Zone. I think that was really good, and I think Hoag recommends Mind Over Markets on the fundamental side.
Right. Another thing you got to remember too. I mean, there's a lot of good and decent videos out there. I know that you check out our Coach's Corner videos. Go to our YouTube if you're on your YouTube channel. Just kick back a little bit and go to the videos. There's a lot going on there. Even we had Dylan with us just a little while ago, and some of the points that he talked about hopefully help other traders. So. Make it a daily thing. When you're done trading, I'm going to half an hour after I'm done trading, I'm going to do some work. I'm going to gain some knowledge. I'm going to gain some education, and just a half an hour a day. And then you're done, and then separate and enjoy your family. Or if you're single, and all you got is a dog or a cat, enjoy them also. It's that's part of the separation. I really need to stress that don't take a bad trading day into family matters. All right, that's the worst thing you can do, and emotions are going to pull you in there. So I like how this turned technical and fundamental turned to emotions.
I know. Well, that's the way it goes, right? So let's get back onto that. I think you're a little more fundamental than I am, Eddie. So if I jump on the technical side, you always hear these things, a couple of phrases out there like lagging indicators. Yeah, that is true because you need historical information to be able to present something in real time for you. Even though we're looking at the opening range here, it's the high and low of the first 1 minute candle. So if 1 minute is lagging to you, well, so be it, right? That's just what it is. If you are depending on these 100%, that may not be the right way to go either. Because they do have, right? It's like, okay, here we are where we have the opening range right there, and we went low. We dropped below the opening range, but briefly, and then it went all the way back up through that opening range. It was maybe a 35-point opening range or something like that. Well, that 35 points in the wrong direction. If you said, nope, opening range, short, I'm only staying short, and you try to use that as your 100%, this is what I'm doing all the time, be careful. So indicators, lagging, relying on them, just be careful what you're doing. Like if you're using a moving average, it has to be lagging because you need all that, 100 period moving average that's going to look back 100 periods, 100 candles, whatever you're on. A 1 minute chart would be 100 candles, right? So you're talking an hour and a half or so. 5 minute chart is different. 30-minute chart is different. So I'm not against indicators at all, as long as they're using them as a confirmation as to what your trading is like. Yeah, I really like this. I think it's going to keep going down. We did have that report yesterday that came out that had some bad news on it. Market's been dropping. MAs are dropping below opening range. Volume is building up. Might be a good time to take a short. That's all I'm saying about the technical side.
Right. All right. So we're coming to the end of our little segment. And remember, it's all about individual preferences, And the thing is, too, if you're in the program and you got that practice account, maybe set aside a few hours later in the day or so, or maybe before the market opens, where you can sort of try to test to maybe see that maybe you are a technical trader. Maybe you're a fundamental trader. But just remember, if the short-term traders may favor the tech side, technical analysis, while the long-term investors, traders may rely more on the fundamental trading. So if you're a short-term, maybe you're doing the wrong thing and things aren't working, or maybe you're a long-term and maybe you want to sort of switch things around, but otherwise.
And the instrument too. It's kind of tough. In my opinion, it's really tough to have a 2 or 3 month outlook on NQ. It's intraday. But if you're going to look at some of the commodities and golds and oils and cottons and sugars and cattle, yeah, you got to be looking at a few weeks out to make that work for you for sure.
All right. So before we leave here, there's some comments here I just want to share. Sure. Dart Trader says it's scientific fact that you will express physical signs of stress before you are mentally aware of your stress. All right, that's what I'm saying. Checklist, not only a checklist for your trades, have a personal checklist. How am I doing? You're the one clicking the buttons. All right, traders should pay attention more often to the psychological or physiological tells when they trade. Very well. I think that's something great to share. Yes. Merle's talking about when I get a winning day, I tell myself tomorrow supposed to lose half of that. If I win, that's good. If I lose, well, it's what I expected. But don't go into a market saying that I'm going to lose. But what you're doing is you're giving yourself a personal loss limit. All right. Maybe you approach it that way. Say, okay. Yeah. A lot of traders, they come in saying, how much can I make today? Well, the question you really got to ask yourself is, how much can I afford to lose today? So I think that's what Merle's doing. Ask yourself, how much can I afford to lose today? And if you follow through, you'll be back tomorrow. Let's see here. Brian says, Best Loser Wins is a great book.
Yes.
Danny says he's reading Trading in the Zone.
Good.
Brian talks about Original Prints from Jesse Livermore, How to Trade in the Markets. I think that's a name. You can get a PDF scan. Cool. Yeah, I tell you, man, it's great. Everybody's sharing. There is the love, man. Viper says Mental Game of Trading by Jared Tendler. And we just had him on Tuesday, and we'll have him back again. And David Scott says, agreed. Mark Douglas, read it about 3 times, always find something I missed. Yes, you do. And JT says, I find myself winning more trades on the micro side versus the mini side. It's because the stops are wider. Should I use the same stops as I do for the micros?
For minis, you mean? If you soon, yeah, it depends on the trader and depends on the account size. If you have a stop that's just this X number points away on a micro, and then you do that on a mini, that's 10 times the amount. So if you do it, let's just say it's a 100-point stop on an NQ, that's $20 on a micro, right? I'm sorry, $200 on a micro and $2,000 on a mini. Well, on a 50K account, you're blown. So you got to definitely make that adjustment for it. I would say what I would suggest is that you're on 1 micro, go to 2, then go to 3, then go to 5, then go to 7, like that. You can build them up. Well, max 5 depending on the account that you have. But just keep adding it that way. But it's really tough to not adjust your trading. Okay, it's the same trade. If you're targeting 10 points, 10 points, 10 points, 10 points, do the same thing with 2 micros, then the same thing with 3, the same thing with 5. It's just repetition. That's why future. It's easy to scale up with them, and it's easy, but it's simple to scale up. It's just changing a number from 1 to 2, and then trade exactly the same way when you're comfortable with it.
Right. All right. I appreciate you being with us here, friends.
Yeah.
Traders. If you like what you heard, and if you like what we're doing here at Topstep, we need to know. And the best way of doing that is hitting that like button. I see 354. I'd like to see 454 soon. I mean, today's very low, and I'm wondering if maybe they don't love us anymore.
They do that. That's okay. I'm going to throw a quick plug in here, Eddie. I'm doing a class tonight on Discord.
That's right.
All the coaches do that. Yeah.
What do you got going on, Robbie?
Well, we talk about technical stuff. And I'm a technical guy. And what I'm doing is I'm presenting 6 different chart types, 6 of them. And we're going to go through each one of them and how you can use them to enhance your trading. Maybe it's one you've never heard of before. Has anybody traded a bid-ask volume, or maybe not a Renko or Heikin-Ashi bars, right? So 6 of them I'll be going through 6 p.m. Central Time tonight in Discord. live show. All the coaches do this, by the way. We all have our channels. It's right at the top. It says events. We all just plug in there. And there was one yesterday, 2 the day before that. And it's just a great thing. I always jump into the other coaches. I'm always there to learn something. So hopefully I see you there at 6 p.m. this evening in Discord. We're going to talk about 6 different chart types.
All right, Robert.
Say that again.
Where?
Discord.
When?
6 p.m. Central Time.
When?
6 p.m. Central Time. Are you listening? All right. And the Discord channel's name is?
It's the name. Yeah. Well, no, it's right under Coach. It's called Classroom. But if you are into the events are on the top left. Join the event. You'll get notified when I go live.
All right. This is cool. All right. Robert, thanks for being with us here today. And we'll get you back again here real quick. But coming up next, we've got group coaching with Coach Jack. So.
I'll be sticking around for that too. Love it.
All right. If Robert, you got any questions, you just ask, okay?
Absolutely. Right, thanks, everyone.
All right. Thank you.
Thanks, Eddie.
Welcome back. Welcome back. Thanks for sticking around. And I know that for those that did stick around, this is going to be well worth it. You might notice or you might recognize this handsome gentleman to my left or right. The guy next to me is Coach Jack, one of our all-star coaches. And Jack, how are you today? Can you hear me, Jack?
Oh, fine, Eddie. Thanks
there
for
he
having
is.
me on. It's an honor. Can you see me?
I can see you. I can hear you. And if I was even closer, I'd be able to smell you. So I smell a little high karate going on there. Is that you?
I'm
Seems to be
having a hard time hearing, I guess.
It could be. Could be.
Are you with us, Jack?
Yeah.
I'm Jack too.
All right.
Yeah,
Well,
I'm
you know the
getting an
topic
echo.
that we're gonna. All right. I guess you can't hear. Oh well. Let's see what we can get done here. I think he's in Michigan. That's why. But anyway, the topic today was Jack was going to talk about some of the most important things in trading that we forget about, and it's the basics. I myself, guilty as charged, forget about the basics that need to go with you each and every trade day, whether they be boring or not. These are things that you got to follow. So, Jack, what do you got for us today? Well, you know what? Before you do that, tell us about yourself real quick.
I am going to take Jack off camera real quick, and we'll see if if he can hear us.
I'm hearing you twice talking.
All right,
and then I hear
he's got his YouTube on, maybe.
I think he has 2 rendezvous screens open. Or let me. Now you guys get behind the scenes action. Give me 1 second.
There you go.
Should
Hold
I
on,
close?
we need some
I'm
behind the
going to
scenes
close.
music.
Yeah, let's do it. Do we want to do this live? Let's just. I'm gonna go to the coffee break real quick, and we'll get this
We'll figure
figured
this out. I guarantee y'all.
Yeah, 1
All
second.
right, I reckon.
We'll be back.
Oh, we'll be back. Ah, yes. Very painless.
What's that thing for?
Well, it's for education. Jack, how are you today?
Oh, fine, Eddie. How are you?
I'm fine. Thank you for asking. Very nice to have you here with us today. And let's get into this right away. Jack, you want to give us a real short bio of who you are and why you're here?
Well, I'm here because my son Johnny asked me one day. He says, "Dad, would you like to coach some of the people on our Topstep because they're very bright and they don't seem to be getting funded for some reason. And we're trying to figure out why. And if you talk to some of them, we could get some answers." At which I said, I said, "John, I never was a teacher or anything like that." So then my wife hit me in the head with the Tribune. It said, "Do what he asked you to do." Yeah. So I said, "Sure, I'll give it a try." And then the person who I talked to about it, I said, I'm just another schmoo like everybody else on the planet. I've been doing this all my life. I wasn't the greatest order filler in the pit. I wasn't the greatest trader on the floor. I'm just kind of me, and I'm getting kind of old. And what do you want me to say? And they said, "Well, just tell them the truth." Right. I said, "Well, that I can do." Because, and what I found out in my own personal journey through this life was it's such a wonderful thing to be able to kind of unload all my experiences and pleasures and shortcomings of my whole life as it regards to who I became as a trader and everything. To me, it became another journey all in itself because I got a chance to do something nice that will help some people, which helps me.
That's awesome.
It's really that simple.
Jack, too, it's in my experience with coaching, I learned myself, and I learned from traders reaching out for help, and it's sort of a, it's a tennis match. What can you show me? What can I show you? What can you tell me? What can I tell you? What can you share with me? What can I share with you? It's a back and forth thing, and we both learn, as we go. So. I think it's about time that we maybe start learning, or at least, what's your topic today, Jack?
Well, I wanted to talk about things that would help a person in this journey to understand a little bit about themselves and where they're coming from, where they're trying to get to, and why. And how to understand certain things before all the book learning and the chart learning and all the other things, so that they got kind of an idea, what am I doing this for? What's the point? I don't understand it yet. Learning things like success takes time. You're not going to make $1 million doing this in an hour or 2 hours, and maybe never. And if your point is to make $1 million, it's never going to happen. Your point has to be getting back to the basics of what I think everybody has to know before they ever make a trade. First time I ever walked into a pit, I was told, it's not how much you make, it's how much you don't lose. Now, we all hear that. We hear it 1 million times. But what does it mean? In today's parlance, it means don't blow up your account. Don't take big losses. If you take big losses in this business, you will not survive. It's not a matter of what. It's not a debatable topic. They would tell me and told all us guys when we were kids, this isn't a debatable thing. If you take big losses, you're going to get blown out of here. It's just a matter of time before somebody taps you on the shoulder and drags you out. Says, "Don't come back till you got 25,000. Give it another try," because they couldn't fool with you back in the 60s and the 70s. They didn't have the computer setups they had today and everything. And if you didn't have enough money in your account to cover your margins, that was it. You weren't allowed on the floor the next day. You couldn't be there. Now, if you have a bad day, blow up your account. put up $100 or $50, whatever it is, and start all over again. But that's not the point. The point is to not blow up your account in the first place, to understand. One of the things that's so important is to understand this opportunity that we have here in front of us is like no other. Believe me, it's like no other in the world. I've been in this business all my life. If somebody ever would have told me, hey, you know, we're gonna cover your losses, don't worry, and everything you make you can keep 90% of. Well, they would have put them into an asylum, you know. It's totally unheard of. This is such an opportunity that I want young people to understand. You can't squander this opportunity. It may not be here forever. It may change, is what I'm saying. And as it sits right now, you got a chance to get, you know, if you don't want to be a college grad, or if you don't want to be a carpenter or plumber, all these other things you can be are wonderful. But this artificial intelligence is going to leave the great majority of people on the planet with nowhere to go. And with the new way of communicating with the rest of the world, everybody in the world is interested in this thing. This is the most, if you're from South Africa or South America or Eastern Europe or anywhere you are on this planet, you can watch this and you can learn, and you say to yourself, wow, this is really something. But here in America, you know, we grow up reading the funny papers and then going to the corn section at the Board of Trade. Then, you know, it's part of our growing up, you know, where prices are, because everybody who worked in the city was part of the price thing. You know, down the street from me in Chicago was Central Soy, a soybean place, stunk up the whole neighborhood. But everybody knew what soybeans were and what they did. They crushed them. They made oil and meal, you know. A 12-year-old kid would know that in Chicago. So the commodity world is different. It's part of our blood, you know. It's part of our psyche in this city. And consequently in the country, because everybody lives not too far from a farm. Everybody's seeing corn and wheat, soybeans, but in other countries, they say to themselves, this is really, really interesting. How can I learn this? And they're zeroing in on us. We talk all day long to people from other spots on the globe who are they're dying to learn about this and how to get into it. And they're very smart people, and they're going to catch up on us someday. But right now,
that's fine. I'd be happy to pass them by me.
But it's going to be, in my mind, when I started out, commodities was a new thing. They had invented cattle and hog products and currencies and precious metals and interest rates. And it was much too much for the market to absorb. There weren't enough people who knew or understood or cared about all these other things. It took years and years to grow all these products so they could trade them on the futures exchange. And now they're at the point where a whole new generation, which is 1,000-fold what my generation was in numbers, they're going to come in and they're going to go into every product that's out there. Might not be one of our top 4 products, but it's going to be something that they're going to say in their country. They understand this, you know. They understand what copper mining is, what this is, and what that is, and they're going to get into all these different things, and they're going to be good at it, and it's going to explode, and it's going to be, you know, I can't talk as an economics professor, but this is going to outstrip all your other financial instruments as far as volume and interest. It's going to ensure that markets are legitimate. People can't corner markets because the interest in them is going to be so big that John Q. Public is going to be able to stand there in front of a big hedge fund and say, well, if you want to sell something this low, I'll buy it because I understand what you're talking about. And it dawns on us they're trying to bully a market around or do this or do that.
Right.
There'll be
Go ahead, Jack.
Oh, there'll be so many people interested in it who come to this from so many different points of view, and relativity is such a big thing. Everything is based on another thing. The price of corn is based on somewhat on the price of $1. The price of $1 is based somewhat on interest rates. Interest rates are based on something in the banking industry. Everything is related to something else, and by being a part of it, you automatically become part of a much larger field, and you see how the relativism is so important in this. How we each as individuals approach a market. You can watch the news tonight, Eddie, from Chicago, and I can watch it from Michigan, and we'll be watching the same show and come up with a totally different idea of what the guy said. You know what I mean?
Yeah, it's like a range of views. I mean, we're all different, obviously, and you put 100 people in a room and you show them one chart, and you ask them, okay, what do you think is going to happen? I mean, you might have a few that do see it the same, but I mean, there's going to be difference, throughout those 100 traders. What they're seeing, they're all looking at the same thing, but it's how you interpret markets, and that's one of the things here that a lot of traders have a problem with is recognizing opportunity when they're looking at a chart.
Yeah, it's so difficult. It all has to do with where you're coming from. I can look at a corn chart, and Mr. Farmer, who I see in the morning at the local coffee shop, will look at the same chart. And of course, the farmer's job is to sell his crop in futures, So he doesn't want to see that market going too high because he's going to lose on his futures contract,
Right.
But Mr. Merchant, who has to buy the corn, wants to see those prices coming down so that they're favorable for his business. It takes a little learning, but it's, how do I say it? I always tell people, do you have to be smart to be successful in this business? And I've been in it all my life, and I've done okay. And I tell them, I got a golf trophy at home, and I got a basketball trophy, got a baseball trophy. I don't have a single trophy for being smart. I managed to stay in this business all my whole life.
Well,
so,
it's almost, I've heard this term being street smart. You don't have to be. I mean, usually the option pits would have all the rocket scientists and educated people from Berkeley, and they would, they had formulas and numbers, and that's all they did. But the thing, when you're trading, be street smart. I mean, common sense is going to lead you to the promised land. I mean, you don't have to be no market wizard, but just know, I mean, educate yourself before you start your trading day. Take time to understand the markets and the instruments that you plan to trade. Knowledge is the most valuable asset.
Right. And that's why I like to get across to people these basic things. In other words, the biggest thing they ever told us was you don't take big losses. Now, you just had to accept it. And then we would watch as they would tap guys on the shoulder and say, your count's too close. You're out. Goodbye. If you just accept the fact you cannot take big losses, then down the road, you're not going to have this FOMO thing or what, all these psychological problems develop because you're not going to paint yourself into that corner.
Right.
So if I can't take a big loss, meaning I got to put my stop at a certain point. And if my stop isn't really where I want it to be, well, maybe I should change my entry order. And maybe if I'm concentrating on what a good entry order is with a cushion and a stop that I can live with. And if I get stopped out, I have to know that this wasn't the market's fault. The market didn't come after me personally. It doesn't know me, doesn't like me, doesn't hate me. The market's only job is to facilitate business, and it does that by going.
Oh, we just lost Jack.
Well,
Why would I put in a market order to buy?
Jack is back. All right. You know what? We're going to take real quick here, Jack. We're going to take 5 minutes and top quiz today. We had 3 top winners winning a 150, 100, and 50K combine. But we did not. We weren't able to have the random winners. And I think Jack's going to join us here real quick. The other Jack.
Yeah. I'll be Jack 2 for clarity here.
Jack 2. New Jack City. Jack 2, what do you got?
All right. Let me see if Jack 2's one moment.
We're going to do the random pick for what are we giving away? 50K combines? Is that right?
Yeah, giving away 2 50K combines. Okay, I am back at it here. It's always when you're sharing your screen, you always got to be careful with these things. All right, everyone, let's get busy here. Okay. Hi, Jack. All right. Today we had 264 people that got at least one question right. So they are in right here. I'm going to the random number generator that will generate 2 random numbers between 1 and 264. Are you ready? Drum roll.
I'm ready. I don't have a sound effect. I got to get one for you.
I'll do like the Christmas vacation thing and just go. Yeah, exactly. Exactly. All right. Get the numbers. They are 102 and 7. Now we'll go back over here. And
Mickey Mantle.
7 is here we go.
All right. Congratulations. You won yourself.
And yeah, and 102. Okay, I gotta hide it just off screen real quick. Okay, are you guys ready?
Ready.
Number 102 is Trader Joe.
Ooh. Wonder if they got any sales on vegetables.
Probably. Congratulations to Here We Go and Trader Joe. 50K Combine. I'll email you guys later. But in the meantime, I'll let you guys go back to dropping knowledge on these kind people.
Thank you very much. And thank you for, we almost had like 300 people play Top Quiz.
Oh, we had more. We had more than 300. It's just that I make it so you have to get one question right.
Right. Another thing. Hey, Jack, did you know on this day, Amazon joined our stock market? Did you know that? 26 years ago today.
Oh,
Amazon
yeah.
Had the IPO.
Seems
amazing,
like good.
Huh?
Just yesterday.
Just yesterday. And also, Jack, did you know that 21 years ago today you were born? Happy 21st birthday today, buddy.
Yes, thank you. How'd you know that?
Yeah. Loved it, Jack. If you love Jack, hit the like button. There you go. I bet you we get 1 million likes on that one.
Yeah.
If you love Jack, hit that like button. But happy birthday, my brother. And,
thank you so much. Yeah, I don't feel a day over 100.
And the thing is, you're all by yourself tonight, right?
Yeah, my wife's in Florida. That means I get to drink a no alcohol beer with potato chips with no salt.
I'm sending you a stripper, Jack. You know, a team of strippers, guys and girls.
Well, I'd say okay, but I can't remember my address.
Okay, then we're safe. We're safe on that. All right. So back to business. We're talking about the basics of trading, and go from there.
Well, I just think these basic things, and there's only a couple things, but they're what you need to build on. Knowledge is power, like you said, and you have to learn all the different technical aspects and fundamental aspect that you think will be what helps you as an individual, not what the most popular charting system is, or not listening to the manufacturing point of view or the consumer point of view. You got to be able to look at a chart. In the morning, I get up and I have a process, but when I turn a screen on, I don't have to take a ruler and a pencil and draw lines and triangles, or I don't have to. All I got to do is look at a chart, and I know. I don't mean to sound like I'm a real bright guy here. I know when I look at that chart, everybody knows what the direction is. So all I got to do is look at the chart. You could see it. But it's not that simple. If it was, everybody would. You ask yourself, how come everybody's not buying a low and selling a high? It looks pretty simple, but it's really not. It's very difficult. And you have to train yourself through your own process. What it is, and you have a million things. A day trader has to digest so many things just to be able to say, yes, I want to buy, or yes, I want to sell. But I look at it this way. If I don't know if I want to buy, and this is not what everybody thinks, but if I don't know what I want, if I want to buy or sell, I may revert to flipping a coin, putting in a micro E-mini, let the thing play out. If I lose $50, I say, Mr. Market, what are you trying to tell me here? So I go back in. If I lose another $50, I'm getting warmer. It's like a fish being in water. If a fish is, us being in the market, it's like a fish being in water. If a fish is in water, it senses the temperature, senses the depth, senses the speed of the current. Nobody has to tell it, what's going on. Same with us. Once we're in the market and we're in for real money, and we're not just doing what ifs, we're actually doing it. And you're asking the market, what am I learning here? What do I have to know to start making money today? So by the time you got to figure it out, you might be out $150 if you're keeping a tight spot, and using a micro. But that's the best $150 you ever spent in your life, because now you got a real idea what's going on, and you got an idea what's going on because you've been kicked in the pants 3 times. I'm doing something wrong here.
Yeah, Jack, I've got 2 things here real quick. Like to give a shout out. Of course, our good friend John Hoagland. Well, his brother.
Yes.
Rick Hoagland is here saying hello, Jack.
I remember Rick. Hi, Rick.
Also, Rick is one of our biggest fans, and it's cool to have him here with us. Hello, Rick. How are you? Brad Holt's got a question for you, Jack. How do I stay in a trade? All right. How do I stay in a trade? Ready? How do I stay in a trade? I find myself getting out if I'm up 6 to 12 ticks when my target is 40 to 60. Well, Jack, what's the best way to not panic and exit your trade prematurely?
Well, first off, don't be too hard on yourself for taking 6 to 12 ticks. Well, it's not the end of the world. You're learning something. Plus, you're making a couple of bucks doing it. But I always use bracket orders. And sometimes I may exit a bracket order a little early if it's close to my exit price. In other words, I didn't get stopped out and I'm making money, but it seems to slow down when I get close to where I want it to be. So I'll get out if I make 70, 80, 90% of what I wanted. I'm usually a pretty happy guy. So all you got to do is stay a little bit longer and let the thing play out. But you're no smarter a half hour after you make a trade than than you were before you made the trade. So our problem is we outsmart ourselves. You start thinking about it, and that's where you're making a mistake. You put your order in, you watch how the market reacts, if it's going up, down. And even if you're wrong and you come to that conclusion that you're wrong and the market's, let it play out. Take your little loss, because first off, you're only taking small losses. You're not taking big losses. Take your little loss, let the market stop you out, sit back, reflect what it is you did, what went wrong. And if you think, well, I should get back in the same way, just give myself a little cushion, let it come back a little to me, I'll get back in, but stick with it. Stick with it. And if it gets close, and you get cold feet near the end there, take your money and run. It's okay.
Right. The thing is too is, there's a lot of options.
Yeah, we're not stuck with anything. This is the beauty of this thing is how everything relates to you, and because things you read or what your chart tells you, et cetera, et cetera, et cetera. There are some times where if you're not comfortable, exit, reflect. But see, I'm of the old school, and I can't help myself on this because of the way I was raised. You go to work, and you're working to make a living. Just like our parents went to work every day to make a buck so they could feed and clothe and send you to school. And that's how you have to look at this market. This is a job. It's not an investment. And the way you do your job, you learn by doing. And if you're going to jump out of your trade every time you get in, you're really not doing. You're not giving yourself a chance. You're not giving your process a chance. So get in, try to make something every day. If you get up in the morning and you approach your screen and you say, I got a hangover, my wife doesn't talk to me, I struck out with the bases loaded, I spilt my beer in the backseat of the car. Oh, what else could be wrong? Yeah. John Daly, maybe.
Maybe John Daly.
But it's, you have to tell yourself, well, this is my job. I got to do this, whether I want to do it or not. This is my job, and I got to treat it as a job. So I'm going to do what old Mr. Doherty said. I'm going to put on a trade with a micro. I'm going to put a stop loss in there of $50, which is $10. It's not $500. It's not $1,000. It's 50 or 100. You're going to learn the same lessons without getting murdered. Yeah. But after you're in it and you start thinking for a while, and pretty soon all the baggage is back out at the corner where it belongs, not sitting there in front of your computer. And all the problems start to melt away as you make 100, then you make 200, then you're up 400, and pretty soon you got a nice day. And you feel better about yourself because you went to work and you did your job. Now it's time to go home. And it's hard to do, but like I say, this is not an investment. This is a job. If you're a young guy, you're coming into this thing, and I say, don't squander this opportunity. Well, then you got to get in there and you got to do it every day, and you got to look at it as I got to go home. I don't care if it's $50 I make, or if I don't care if I lose 200, but I'm not going to lose 2,000. That's what I'm not going to do. Right. So tomorrow morning, I'm back again. I'm back, and then I can't say to myself, I'm back in the war. You know why? Because this is an war. The only person you're at war with, and this is yourself. You have to tell yourself that your job here, part of your job is to be reasonable, like you would in any otother job. Right. So what's reasonable? You can't make $1 million today. It ain't going to happen.
Jack, I what you just said, I got to agree 100%. we're not at war. We're not here to fight the market. If you find yourself in a battle where you're fighting the market, it's probably best to call it a day, because we're here as traders. We're not here as warriors. And when you get in that situation where you're headbutting the market and things aren't working, and you're pushing, that just brings on high levels of stress, which is very unhealthy. Recklessness, as far as trading, and it's probably not your day. And there's going to be a lot of days like that, and you've got to understand that not every day is going to be a good day for you. It's just how you manage. And when you find yourself in a shit day, when things aren't working and you can't find the right entry, you can't find the right exit, and that's telling you something. That's telling you know what, log off today. You're done for today. And it's just like a starting pitcher on the mound with the pitching coach or the manager. They let them go as far as they can go. And when things are starting to fall apart, they're not going to say, "Oh, go ahead and stay out there." No, they're not. They're gonna walk out there and they're gonna motion to the bullpen. We got somebody that's going to come in for you. You know what? You did the best you could. You did good today. Or you know what? You were a mess today. Go hit the showers. And that pitcher is done. He can't come in and pitch again that game. He can't come in even to bat that game. He is no longer technically on the roster. So that's what you got to do too, is when you decide, you know what, I'm not having a good day. Don't try to fight and say, okay, I'm going to come back and then I'm going to come back. Most likely the mental aspect, your mindset is deflated. Okay. You want to make sure that you can rest up, come back tomorrow. Market's going to be here. As a matter of fact, the market's going to be here with open arms. So, put it into perspective. All right.
Yeah. You have to get into your own mind. You have to understand yourself. You have to be able to manage yourself. The management part of this whole deal is you got to manage yourself. You got to manage your money and manage your the markets. It's not easy. You got to have discipline. It's a part of life like anything else. You can't just do what you want to do when you want to do it, because this is capitalism at its apex here. If you do what you want to do when you want to do it, and the market's going to do what it wants to do when it wants to do it, there's no talking your way out of it. You get to the bottom quarter and you say, well, I lost a whole lot of money. I wasn't real successful today. I didn't do the things that I told myself I was going to do. And you have to work on these, and that's part of the process, and the process is so important. It's a process. It's a series of steps. What are steps? A series of actions. When we say actions, they're physical acts. They're not ideas. They're not thoughts. They're physical actions that you have to take on a daily basis. And these actions have to be compatible with the market on a daily basis. So your process is going to stay the same. It's just how much weight you put on different aspects of the process. And you have to be able to change. It's like Darwin said, if it's not the strong and it's not the smart that survive, it's those who are able to change, adapt.
Or die. Exactly.
Yeah.
A few comments here I want to share with everyone here. Owen says, you're never going to dominate the market. Yield and go with it. I like that. Also, my good friend Rick Hoagland, can't find the market, can't force the market. Be prudent on your entry points and limit your risk. That's big. That's big management. So important.
That's one of those basic things. You have to understand that in order for all the rest of this knowledge you're going to get by learning your charting techniques, et cetera, they all rest on this. If you can't do these little things first, all the charting in the world isn't going to help you because you're not going to be here anymore. Right. If you keep having to reset your account, pretty soon you get tired of it and say, it's not for me. And of course, that's not good for us. It's not good for you. This is such a wonderful, clean, decent, honest way to make a living. There's no fooling yourself. There's no lying. You can't lie to yourself. You can't lie to the market. The market's not going to lie to you. You don't have to tell anybody what to do. Nobody's going to tell you what to do. For a certain personality type, it makes all the difference in the world in how you relate to the market, is how you understand yourself and how you can trade reasonably on a daily basis and live a reasonable life, so to speak, afterwards. It's the greatest learning opportunity in the world, and it's the greatest money-making opportunity in the world. And it's going to be, it's like I say, I'm not an economist, but this is going to be so big and so important to all the markets someday that if you learn it right, you got to step ahead of the rest of the world. You can do this for the rest of your life.
Jack, one thing that I have found that really is something that, even I myself and many other traders with the experience behind them have a hard time accepting losses. I'm the worst poor loser I know, as far as competitive sports and stuff, some people can walk it off. You see after a football game, they meet in the middle and, hey, what's going on? Hey, let's go to. Yeah, I would probably be the one that stormed off to the locker room. I'm pissed off. But in trading too, I mean, it's really hard to say, okay, I'm down today. I'm not going to trade anymore. And Michael did that today, which was well managed too. He wasn't taking big trades, but he had a few trades that did add up, and his judgment was, okay, enough is enough. All right, I'm done for the day. You got me today, but you know what? I'll be back tomorrow. What's a good way to teach yourself? I need to know that losses are part of this game, and I need to accept those days when they do come.
I look at it this way. If you look at a doctor, or if you look at an engineer, doctors have to be perfect. If they're not right all the time, somebody's going to die. Or if an engineer screws up, the bridge he just built is going to collapse. But we as traders, we can be wrong 3 times out of every 5, using what we talked about earlier, the 2-to-1 ratio. If you're right twice out of every 5 times you're a trader, you're going into the Hall of Fame. You're hitting 400. Right. If you're right 2 times out of every 5, if you're a doctor or an engineer, you're going to be looking for a new job pretty soon. But they have a hard time understanding trading because they can't stand making a mistake. They have to be right. You just can't go from being right 100% of the time to being wrong 60% of the time. It just doesn't follow in the real world that a person can do that. They have their egos, which they have to do their jobs. We got to put these egos aside, and we got to remember that most of us, we're C students. Our parents let us know how dumb we were when we were kids. Our teachers let us know how dumb we were in high school. And the brokers let us know how dumb we were when we were learning this business. And so here we are at 50 years old. You know what? We're still pretty dumb, but we know it. We've accepted it. We can lose 3 times out of every 5 and know that we're going to make a better living than most people on the planet. So you take your beatings and you use your losses. Your losses are really nothing but an educational process. They're part of the whole thing. You have to take your losses in this business. Losing isn't a bad thing. Big losses are a bad thing. So your job, as we talked about, this is a job. It's not an investment. Your job is to be reasonable. That's part of the job. And to be reasonable means tomorrow morning when you walk, when you turn your screen on, they say walk into the pit. You're going to say, I had a good day yesterday. I lost $250. You're not going to say, I had a bad day yesterday. I lost $2,500. Now, if you're trading a $50,000 account, you can't be risking $500 every trade because you won't last long. It's a numbers game. It's going to come and get you. So you take your losses, and you don't fret. It's not a bad thing to take a loss. You take a loss, you step back, you analyze it. It's instantaneous after a while. You reflect on it, you get back into the market. And it's a learning process. We never stop learning. We never go into a day thinking, gee, I'm going to do everything right. You know you're going to do most things wrong, but you only got to be right once or twice out of every 5, and you're great. You know, perfectionists, if they're right 99% of the time, they hate themselves. They can't stand that 1% loss, you know.
Exactly.
Yeah.
Right.
And if we're right once out of 5 times, we're in the major leagues. You've made a living. So you have to look at it in that way. You have to understand what it is you're trying to do. And your goal for the day is to either not lose much money or to make some money. And the money you make has to be reasonable with what you're risking, with your base of knowledge, with how long you've been in the business, how mature you are in the business. And pretty soon, you know, you find yourself, if you're doing things the right way, you're going to find yourself funded. You're going to say to yourself, how did I get funded? Man, this is like a miracle. And then you're going to, I've had people that they've been doing this a year, 2 years, and all of a sudden they just took a step back and just took these little steps one at a time. And even if they didn't agree with the step they had to take, they took it.
Right.
And if they made money, fine. If they didn't, fine. But they were following a process that got them a reasonable expectation on what they were doing.
Right. Jack, we're coming to the top of the hour here. And Mazel had a question earlier. And Mazel, I'm sorry that I missed that. You posted it back again. One last question here, Jack. The thing is, Mazel is asking, was there anything in the beginning of your trading journey that you realized later on that no longer served you?
Oh, that's a tough question. What no longer served me? Well, it no longer served me to have expectations. In other words, you know, your eyes be bigger than your stomach. You know what I mean? You learn that as you get older, that you don't have money. Money's money. It's a thing like anything else. You make money, you lose money. If you have a nice family, if you have your health, the rest doesn't really matter so much. You go to work, you make your living every day. You're not going to be Nelson Rockefeller probably by working here 50 years. You're going to make a nice living. You're going to make some mistakes along the way, but you're going to realize that you worked hard at accomplishing a goal, and if it didn't come out perfectly, it's okay. You don't have to be something you're not. What did I learn that I could have done without? I could have done without judging myself all the way through the process till I got to a ripe old age where I said, I'm tired of beating myself up. Whereas I saw some people that I grew up with who went into this thing, they did it so what seemed easily, but they had the right attitude, the right frame of mind. They understood they're just another schmoo trying to make a living. If it's going to work out, it's going to work out. If it's not, You know, I remember guys say, very rich people saying, you know, if this don't work out, you know, I had a decent job before. I was a carpenter, a plumber, bus driver, whatever it was. I can always go back to that. I can always make a living. This isn't the be all and the end all. But if you can follow the steps and follow your processes and take it step by step and be reasonable, there's no reason you can't survive in the business. You can. You can. You can be very successful, very happy. But the bottom line is the happiness part. The money comes and goes. The friends come and go. The family, everything comes and goes. And nothing is forever. You learn to live in the moment and accept it and appreciate it.
Love that. Love it, Jack. Mizzle says, love this advice. Yes. Yeah, Jack, I really appreciate you being here with us. Now, if you want to follow Jack, Jack's got his own channel in our Discord. Can we post that Discord link for those that are not members?
Oh, sure.
If you're not a member, by all means, get in that Discord. Very happy to have you here with us, Jack.
Oh, it's an honor. You know, can I say one thing? You and Eddie are you and Robert? You and Robert and Hoag, the three are such a great example. I mean, I'm a whole generation ahead of you guys, and I've learned so much from you. And you do what you do with such goodness and honesty. I mean, I told somebody, do you know Hoag? And I says, yeah. I said, listening to Hoag is like sitting on your grandfather's lap. You might not know what he's talking about, but you sure do believe him. And I believe that. You and Hoag and Robert, the three, is give so much. And when people watch, they say, you know, I've never seen anything like this. This is what I needed to give myself a little hope that I can do this thing, that I don't have to be Albert Einstein to get through this thing. All I got to do is be me and be reasonable. That's all.
Right.
It doesn't take much more. You have to learn. It's work. It's not easy, but accept it for what it is. It's a way to make a living. It's a way to make money. You go to work every day so you can put a few bucks in your pocket. So at the end of the week, you can take the money out of here and put it in your bank account and spend it and use it. It's such a wonderful thing. And I keep going back to this is such a thing that, like everything, isn't forever. And you have to look at this as something you don't want to squander. You don't want to waste time. You want to take it seriously. You want to learn. And if you can only do it an hour a day, make that hour a real hour where you're learning, where your mind and body are in this thing. And you'll get to the point where you say, you know, I do this well enough that maybe I can do it when they come and tell me I'm fired from my job because a robot's doing it. You can say, you know, that's okay. That's okay. I got another job. I don't have to sit here twiddling my thumbs. I've learned another trade, which is trading. And that is the new trade. That is, moms and dads aren't telling their kids go out and be a plumber or a carpenter now. They're telling them, learn how to trade. You know, you can make a living doing it because we all know more than we did 50 years ago. And we all know things are going to change. And I at least think I know that this is going to be here forever. There's always has to be a price mechanism.
This is the new floor. Yeah, this is the new trading floor. Well, you know, Jack. Let me just say, much love from this side to your side.
Oh, thank you, Eddie.
You are a genuine article. Okay. Yeah, it's an honor. It was an honor to be your friend, to work alongside of you. You know, you brought, as Alberto says, you brought hope to a difficult trade. You know what you share with us, and one more time here, if you liked what Jack was talking about here today, hit that like button, smash that like button, subscribe, because hey, we want to see more of you. We want you to be here with us while we're here. And once again, as Mizelle says, happy birthday, Jack. Jack, you have a wonderful day, and all the best to you, partner.
Well, I got a box of milk duds, which I'm going to attack right now.
Kick back, throw the shoes off, sit in that lazy boy, put on some Thursday night football, and you enjoy yourself.
Thank you so much. It's been an honor. Thanks, Eddie. And thanks, Robert. And thanks, Hogs. And thank you, my son, John. He really made my life such a positive change by talking to others. You know, it's such a big deal. It's what it's all about.
Before we go, happy birthday to our other coaches, Jay Cook's mom. Happy birthday, Mom.
Happy birthday, Mrs. Cook.
Give her a big hug from all of us, Jay. All right, my friends. As they say...
No, that'll be all. Just be sure to lock the door behind you on your way out. Good night.
All right, we're out of here. And we'll see you bright and early tomorrow morning. Get some rest. Tomorrow's Friday. Friday. And I think we've had a good week here. So take care. Stay safe. Stay healthy. And we'll be back here. See you tomorrow.
Thank you, Eddie.